No.
Shall I start now?
Yes, sir. Yes, sir.
Okay. Okay. Recording I have put already, no?
Yes.
Okay. Um, Good afternoon, ladies and gentlemen, boys and girls. Come back to the program. So I was with you on. Hope I am audible to everybody. Hope I am audible to everybody.
Yes, sir.
I was with you on 14th of October, wherein test paper number 1 was discussed, the deposit related matters. Then the answer and the PowerPoint presentation as well as the question paper without answer was uploaded in CBOA website. Subsequently, there is 2 days back, the test paper 1 with answers is also uploaded. Test paper 1 with the answers are also uploaded. So that test paper covers the deposit policy of the bank, starting from SB. Then we discussed about overdue debt. So many things we discussed over there. Then we went to NND policy of the bank. Bank has come out with a circular. And then the certain guidelines with regard to Reserve Bank of India deposit matters were also discussed with that question paper. Then I also concluded the PowerPoint presentation along with the new SB products of the bank. Please go through, see that your method should be, please go through the PowerPoint presentation. Subjects you already read from your circular or somewhere. Please go through the PowerPoint presentation. Please go through the question paper without answers first. Then you go through, that is that with answers which I have posted, so that you can compare and find out where there are small mistakes you would have made. Okay, sir, that is with regard to the test number 1. Today, so I'll be with you for about 3 hours. By maximum by 5 o'clock, we will wind up the session. Saturday, I know the difficulty. Now to today's session, I'll be taking up with you, that is a test paper number 2, the important changes in the credit related matters other than retail lending issued circulars by the bank in the year 2023. It seems I was told this time the MD and CEO of the bank has told in some review made, most of the questions will come from the circulars. Already stalwarts like Mr. Reddy, Mr. Ravi Kumar, etc. would have discussed on credit policy, credit risk management policy of the bank, then delegation of powers, etc., etc. So, that is during the course of the discussion, 2-3 repetitions also will be there. Don't worry, please take it. So these around 34 questions are there in test paper number 2. Right from HO Circular 7/2023 till HO Circular 614/2023 on credit related matters other than retail lending or mostly other than agriculture also. Okay, so we are starting the session now, both by means of PowerPoint presentation and the question paper answers we will discuss. After the class is over, I will post that is the questions with the answers also. So make the practice of reading. First the PowerPoint, the subjects already you are read. Please go through the PowerPoint presentation of mine. Then go through the question paper without answers. Then you come back and check, cross-verify what all the things you have done. Okay, sir. Now, so we will see the PowerPoint presentation. Here, okay, it has gone to the last. So the first question is with regard to HO Circular 7/2023. So the HO Circular 7/2023 talks about valuation of agricultural land. You would have read somewhere. So the gist of the circular is given in PowerPoint presentation, 1 slide, and one question is also prepared for that. Our question number 1. Valuation of agricultural land with structure. So like farmhouse, poultry shed, etc., to be done once in 3 years at the time of sanctioning the loan or at the time of takeover of the loan. Subsequently, once in 3 years, the valuation to be done appropriately uploaded in CBS fast path. Then lands without any structures, for example, for crop cultivation, or that is for well digging, etc., you are giving, where there is no structures are involved. So in that case, the valuation of the agricultural land to be taken once in 5 years, periodical. This is called a periodical valuation, other than the valuation at the time of sanctioning the loan and subsequent, that is, or at the time of takeover. Then agricultural farming land valuation is as per guidelines value for registration. So agricultural farming land guideline value, GLR, you should take into account. Who has to do the agricultural land valuation? Whether it has to be done by the panel valuer or by the managers and senior managers of the bank, etc. 2-3 guidelines are there. What is that? For agricultural loans up to 30 lakh, AEOs or AEO promoting managers. In Canara Bank, it was AEO and AEO, this agricultural extension officers. In our E-Syndicate Bank, brothers, it is assistant manager, rural development. So when the loan value is up to 30 lakhs, the valuation need not be done by, that is external valuer. It is sufficient if it is done by AEOs and AEO promoting managers. And if the loan value is up to 20 lakhs, other managers will do the valuation other than this AEO, AEO promotee or AMRD, etc., etc. Other managers, general managers can do the valuation. So up to 30 lakhs, if it is AEO or AEO promotee manager, you need not do the valuation through the external agency or empaneled valuer. And if the loan amount is up to 20 lakhs, your generalist managers, they themselves will do the valuation. You need not get it done through the panel valuer. Beyond the above limit, and agricultural valuation, so that is these two things is for agricultural land valuation without structure. If so, up to 30 lakhs loan amount, up to 20 lakhs loan amount, agricultural land without structures, who has to do the valuation? Beyond the loan amount of 30 lakhs and 20 lakhs agricultural land without structure, and for agricultural land with structures, and for agricultural land with structures, that is land and building, wherever you have, valuation report to be obtained from revenue officials of the respective place or from approved consultants or approved valuers. Value to be uploaded in BAM 74. If they ask that question, BAM 74, you should not miss it. So again, I repeat, that is agricultural land valuation, that is if it is farm landing without any structure, once in 5 years. If it is with structure, once in 3 years. And then farm landing, agriculture farming land valuation is as per that is guideline value for registration. Agricultural land valuation where without structure, if the loan amount is up to 30 lakhs, AEO or AEO promoting managers, AMRD or AMRD promoting managers. If the loan amount is up to 20 lakhs, generalist managers can do. And beyond these 30 lakhs and 20 lakhs, if it is agriculture farming land without structure, as well as agricultural land with structures, who has to do the valuation? So it has to be obtained by the revenue officials, or it can be taken from the approved consultants and valuers. So value to be uploaded in BAM 74. That is what BAM 7/2023, sir. Now with regard to that, I made a question here. Which one of the following is not a key point for valuation of agricultural land as per HO Circular 7/23? So which is not correct? Okay, which is the odd man out. So whenever in the question paper, you would have, all of you are 1 to 2, 3 to 4, etc. Had you read in the question paper, wherever it is negative, they use the word not or odd man out in the that is black bold letters. That's why I made it here. Which one of the following is not a key point for valuation of agricultural land as per HO circular, which is not in the circular? They are asking. Your options are valuation of agricultural lands with structures to be done once in 3 years. That is correct. Without structures, once in 5 years. That is also correct. AEO, AMRD and AEO, AMRD promoting managers to do valuation of agricultural land of value up to 30 lakhs. Others for agricultural loan up to 20 lakhs. Beyond 30 lakhs and 20 lakhs loan amount. And for agricultural land with structures, land and building, valuation to be obtained from revenue officials or from approved consultants valuers. So which is not correct? Out of the A, B, C, D, E, I think we have 5 points. Out of the 5 points, which is not correct, or all the points are correct? So according to me, as per this circular, point number that is C is not correct. You read the point number C. AEO, AMRD and AEO, AMRD promoting managers to do valuation of agricultural land of value up to 30 lakhs. No, it is loan amount up to 30 lakhs. If it is AEO promoting manager or AMRD, agricultural loan amount up to 30 lakhs, it is not the value of the land. So here, which is not correct? So question number 1, point number C is not correct. It is not agricultural land value, it is agricultural loan amount. Okay, sir, that is with regard to 7/23. Then we are going to circular 8/23. What is that 8/23? All of you know, will be give the answer for me. What additional details are to be incorporated in the LSR? LSR, you know, the legal scrutiny legal scrutiny report given by the panel advocate. By panel advocate with effect from 15/1/2023 as per HO circular 8/23. What is to be incorporated? Boundaries of the property, no. Date of visit of the property, no. That is, it is additional detail. Already it is there. Your boundaries of the property, date of visit, already it is there. Such details of sursoy properties to be mortgaged. Yes, that is the detail, the new detail that has to be incorporated in the LSR by the panel advocate. So question number 2, answer is C. Approved plan, etc. That will be given by the that is your panel valuer. Leave it. So for question number 2, which is the additional details given by the bank in this year to be incorporated in the LSR by the panel advocate, search details of sursoy property of the properties to be mortgaged. Question number 2, answer is C. Question number 3. As per HO Circular 18/23, what are all the additional charges to be collected from MSME borrowers for generation of CMR? CMR expansion is CIBIL MSME rank. All of you know, so when you will take CIBIL MSME rank, or what type of MSME loans you will take CIBIL MSME rank, that is your CMR, we will take the CMR. The MSME loan amount is about 10 lakhs up to 10 crores. If they ask that question, you should not miss it. It is long back from 2020, 2019, the guideline has come. It is not a new guideline. So that is CMR CIBIL score to be taken, that is from TransUnion CIBIL. If the loan amount, MSME loan amount is about 10 lakhs up to that is 10 crore. Based on that, who is the delegation authority, whether it can be sanctioned or renewed, etc. Because the grade will be there from 1 to 10. Borrower will be ranked from 1 to 10. Depending upon the various ranks, various authorities are permitted to sanction or renew the loan, etc., etc. Now, so now you know, whenever the MSME loan exceeds 5 lakhs or 10 lakhs, etc., etc., to CIR, credit information report from credit information companies to be downloaded. If it is above 10 lakhs up to 10 crores, one that is credit information report you can take from any credit information company. The second, along with the CMR, you have to take only from CIBIL TransUnion. TransUnion CIBIL only you have to take. Then you have to decide. Now, for normal CIBIL data or normal credit information report, we will charge 500 rupees. Suppose if it is, you want to take besides your CIBIL, there is normal CIR. If you want to take the normal CIR, you want to take the CIBIL CMR, that is the MSME rank also. What is the additional charges? So far, it is 500 rupees plus 400 rupees. 500 rupees normal, 400 is additional. From this HO Circular 18/23, it is 500 plus 500. So what the question is, they are not asked what is the total charges. What is the additional charges to be collected from MSME borrowers for generation of CMR CIBIL? So you have to give the answer for question number 3. Answer is D. Don't write answer A, because answer A is the total charges. So already it is 500 plus 400. So far till yesterday, of this circular, you are collecting 900. Now you collect 500, additional 500 instead of additional 400. So for question number 3, answer is D. Okay. Then question number 4. Our bank has entered fresh MoU with Mrs. Tata Motors Passenger Vehicle Limited, earlier Mrs. Tata Motors Limited, and will enjoy the status of the preferred financier with Mrs. Tata Motors. This MoU is valid till which date as per HO Circular? Sometimes they are asking these type of questions also. As per HO Circular 112/2023, this MoU is valid till 26th December 2024. Just you have to note down the date, no other explanation there. Question number 4, the answer is 26th December 2024. Then question number 5. Bank has further renewed the MoU with which motor company, valid from 30/1/2024 as per HO Circular? This is with Mahindra and Mahindra. Question number 5, answer is D. Straight away you take question number 5, answer is D. Question number 6. As per SOP, Standard Operating Procedure on Safekeeping of Mortgage Papers, HO Circular 240/23, half-yearly balancing of mortgage papers are to be taken by both notified and non-notified branches on which dates? What is this notified, non-notified branches, etc.? One thing I will tell you, then we will go back. Okay, what is this notified and non-notified branches? See, you know, Canara Bank, in our bank, all branches can give loan, mortgage-based loans. All branches can give. whether mortgage can be the EMT, equitable mortgage transaction, whether it can be put through in all branches. That is the question now. See, all branches of the bank can sanction mortgage loan. You can give a housing loan, or you can give a Canara mortgage, or you can give an MSME loan by taking a collateral, putting through the EMT, registering the MODDT, etc., etc. Now, my question is whether all branches can give the mortgage-based loans, but in all branches, borrowers cannot put through the equitable mortgage transaction. The equitable mortgage transaction has to be put through only in a branch if it is situated in a notified area only. If the branch is not situated in a notified area, even though the branch can give a mortgage-based loan, but the mortgage has to be put through in a nearby branch which is in the notified area. That is, your circle office will tell if your branch is not in a notified area, so please do not put through the EMT in your branch. Go to the other branch and put through the EMT. Now, my next question is, who declares a place, a area as a notified area or not? Once they ask that question, which authority decides whether a place is a notified area or not? The state government. The respective state government will declare which area is a notified area. If your branch is in a notified area, you can give the mortgage loan and you can put through the EMT also. If your branch is not in the notified area, you can give the mortgage loan, but the borrower cannot deposit the document in your branch. So your officer, along with the borrower, has to go to the nearby area which is in the notified area where the mortgage to be put through. After the mortgage is put through, the original documents as per the LSR, which the borrower has taken and the EMT is put through in the notified area, if your branch is not in a notified area, your officer will bring back the original documents and it has to be kept along with the loan papers in your branch only. Then, that is as per the non-notified area, the register will be there, which are all the loan documents of the other branch. EMT is put through here. In your branch, you will have both the loan documents as well as the mortgage papers will be there. Original loan paper as well as the mortgage documents will be there. Every year, that is in the month of February and August, on 20th February and 20th August, both the branches will take the mortgage transaction, that is balancing. And both the branches have to confirm that is this many number of mortgage loans, mortgage papers is put through on behalf of me in your branch. Those documents are here. So the confirmation has to be given in PRR 18 to, that is, circle office. Okay, the BSIC section, a confirmation has to be given. So as per standard operating, question number 6, as per standard operating procedure on safekeeping of mortgage papers 240/2023. Obviously, balancing of mortgage papers are to be taken by both notified and non-notified branches on which dates? 20th February and 20th August. So here 2 more points I told you about the notified, which authority declares a place as the notified, and which is the return in which the balancing availability of the documents to be confirmed to BSIC section circle office. State government is the authority, and then PRR 18 is the statement. Question number 7. Which is not relevant with regard to safekeeping of mortgage papers as per HO Circular 240/2023. Point A. NB 110 is the register for recording deposit of title deeds. B. Interim movement of mortgage papers to be recorded in NB 27. Inward register for mortgage papers ought to be maintained in NB 132. Why I have given the number specifically? Suppose if they ask in the exam, the register for recording the deposit of title deeds, what is the form number or book number? So that type of questions also they ask. You have to mention NB 110. Here one more point I also want to tell you. The register for recording the deposit of title deeds to be preserved for how many years? These register, the EMT, we call it as EMT register, to be preserved permanently. If they ask that question, as per the records retention policy of the bank, I am linking there over there. So these register, the EMT register, to be preserved permanently in the branch. Okay, NB 110, so you should know, NB 227 you should know, and NB 132. Three register numbers are given in this circular. Then point number D, specific permission from sanctioning authority to be obtained for release of title deeds after ensuring no direct or indirect liability of the mortgager is with the bank. Point number E, a system-driven package closed mortgage loan tracking system. If they ask you to expand the CMTS, so this was introduced this year. CMTS, please expand the CMTS. So at the time, you should not draw a blank. A system-driven package closed mortgage loan tracking system, CMTS, closed mortgage loan tracking system is introduced. In this question, which is not correct, they are asking. So here, point number D is not correct. There is no need to get the specific permission from the sanctioning authority to release the title deeds of the property if the mortgager has released cleared all your loans and liability, as well as he is not having any direct or indirect liability with you. Let us assume the loan is sanctioned by head office. You don't worry. Ensure that all direct, indirect liability of the borrower has been cleared. Then you yourself, the branch authorities, can release the documents. However, with regard to housing loan of employees, employees housing loan, or documents under employees housing loan, even though the employee clears the loan, it has to be permission to be obtained from the sanctioning authority for releasing the document. Presently, you know, RO head is the sanctioning authority for sanctioning employees housing loan. So I have linked it over there. These documents can be released by the respective branches without any prior permission, provided the mortgagor has cleared all direct, indirect liabilities. However, if the document is related to the employee's housing loan, then that has to be permission to be obtained from the RO head, who is the present sanctioning authority for employees housing loan. So for question number 7, which is not relevant, point number D is not relevant. No need for specific permission. So please remember the NB numbers and please remember the expansion for CMTS. Okay, sir. We'll go to question number 8. So this, I think already this has come. See now, you see the PowerPoint presentation already in the credit policy, credit related with whatever policies you say. So far, that is whenever we are giving a loan, so you are getting the valuation report, isn't it? So if the value of the property so far before this HO circular 349/23, if the value of the property is above 10 crores, is 10 crores and above, sorry. If the value of the property is rupees 10 crores and above, you have to obtain two valuation. First time in the credit policy or something like that, in 349/23 in the year, they have brought it down to 5 crores. This you would have learned in the credit policy class. Okay, first time in 349 only it has come. Before that it was 10 crores and above. Now it is 5 crores and above. The subsequent credit policy is 545 or 575 HO circular. This amount is again repeated. So I am discussing with you important changes in the credit related matters issued by the bank in the year first instance when it was issued 349/23. So if the value of the property, not the loan amount, if the value of the property is 5 crores and above, then whenever you are giving a loan, you have to get two independent valuation reports from two empaneled valuers. So already, friends, you know, when you have to get two LSR, legal scrutiny report, if the value of the property is 5 crores and above, you have to obtain two LSR. Similarly, when you go for surface action, if the original value of the property, that is at the time of sanctioning, you don't forget about, don't think when the loan becomes NPA. We are now, the third point is, whenever you are going under surface action or whenever you are going for OTS proposal, if the original value of the property as per the sanction is 5 crores and above, then you have to obtain two valuation from surface approved valuer. Now, everything has been brought 5 crores and above. When the loan is given, if the value of the property is 5 crores and above, not the value of the loan amount. If the value of the property is 5 crores and above, if the value of the property 5 crore and above, 2 LSRs to be obtained. Similarly, when you go for SARFAESI or when you go for OTS, if the original value of the property, not the value when the account become NPA, if the original value of the property is 5 crores and above, two valuation from SARFAESI approved valuer should be in place. Okay, so we have connected the three questions now. Now you see question number that is 8. Bank shall obtain minimum 2 independent valuation reports from 2 empaneled valuers in respect of loan accounts where the value of the individual property obtained as collateral for the loan is rupees 5 crores and above. That is 349/23. Question number 8, answer is C. Question number 8, answer is C. Question number 9. What is not the guideline with regard to charging additional interest in the case of downgradation of external rating in respect of borrower accounts? So this has come first time in the circular 349/2023. Subsequently, in the credit policy or risk management policy, it is continued. Let us see the presentation. Already they would have covered. They have nothing wrong covering one more point. So two circulars are there. Friends, you know, in the bank, we have internal credit risk rating and we have external credit risk rating. So internal credit risk rating, what are the models or the modules are there? Internal credit risk rating, portfolio model. If the exposure to a party is up to 2 crores, you have a model called portfolio model. Then if the value of the, if the exposure is loan amount. If the exposure to a party is about 2 crores and up to inclusive of 20 crores, the model on which we got to do internal risk rating is small value model. So if they ask that question, don't miss it. If the exposure to a party is above 20 crores, up to 2 crores, including 2 crores, the model is a manual value model. So we have portfolio model up to 2 lakhs, and then above 2 lakhs, up to 20 lakhs, we have small value model. Then above 20 lakhs up to 2 crores, we have that is manual value model. Above 2 crores, you know, the Canara internal risk rating model we have above 2 crores, various portfolios. So these are all the major internal risk rating model. Depending upon the exposure to a party, we have. Before sanctioning, what is the periodicity of doing risk rating, internal risk rating? The periodicity is before sanctioning the loan, subsequently, that is before sanctioning a loan or at the time of takeover of a loan, and then subsequently every year, based on the audited balance sheet, the risk rating of the borrower to be done. Okay, risk rating. Why every year it has to be done? At the time of sanctioning the loan, the borrower would be a low risk borrower or normal risk borrower. After when you do every year the risk rating, what is the risk category of the borrower will come to know. For example, if normal risk he has moved to moderate risk, or from moderate risk he has moved to high risk, etc., then immediately certain things to be done in the account. So the sanctioning authority will undergo a change. Rate of interest will increase, etc., will take place. That is why every year the risk rating to be done. Okay. Second point is, what is the external credit rating? You would have heard of the word ECOI rating. External Credit Assessment Institutions. They asked to expand ECOI. External Credit Assessment Institution. Who are they? For example, CRISIL or ICRA, etc. 4 or 5 external credit assessment institutions are there. So besides doing internal risk rating, borrowers have to be done external risk rating also. When you will get the borrower externally risk rated, you will get the borrower externally risk rated if the exposure to the party is above 25 crores. So up to 25 crores, only internal risk rating. If it is above 25 crores, both internal risk rating and external risk rating, then we will map the external risk rating to the internal risk rating. When you do the internal risk rating, you will risk grade the borrower as low risk borrower, normal risk borrower, moderate risk borrower, and high risk borrower. Similarly, when the external credit rating institutions risk rate the borrower, they will say AAA rating. They will say AA rating. Then they will say A rating. Then triple B, double B, B. Like that, the risk rating of the external rating will be given. When it is triple A, it is very low risk of the borrower. Then we will link the external rating with the internal rating and do all the, that is delegation or whatever you say, risk, interest rate, etc. will be charged. So the question is, so when you will do external, when we will do external rating only when the exposure is about 25 crores. Now the question is, the question here is, the question is, so which I have shown the PowerPoint. The question is, which is not the guideline. Question number 9 we are seeing, sir. What is not the guideline with regard to charging additional interest? Sorry, charging additional interest in the case of downgradation of external rating in respect of borrower accounts. Last year, you have done, based on the balance sheet, your exposure is about 25 crores. Let us assume you have done an external risk rating. The borrower has got AA. Okay, very good account. So this year, when you, again you have to do the external risk rating. When you do, let us assume the borrower has become that is B. B is not very good. In that case, any additional interest to be charged to the borrower. That is a new guideline which has come in 349. Okay, so I will show this slide. Downgradation of risk rating external, additional interest to be charged as under. Suppose if the existing rating, external rating is AAA of the borrower, and if the risk next rating, in the new rating has come to AA, that is one slab, one notch down. We call it as NOTCH, one notch. So AAA is that is the first one. The next one is AA. Then we get A, then triple B, double B, B, C, D, etc. Okay, we'll go up to that. So first last year when the external rating band, it was AAA. When you do the external rating, it has come to AA. In that case, we have to charge additional interest 0.50%. On the other hand, if AAA, instead of passing through AA, this year it has come to 2 notches or more. So it has come to A or triple B or double B or B or C. You have to charge 1% additional interest. One notch down, 0.50. More than one notch down, 1%. Suppose instead of AAA, straight away it has gone to D, default risk. So you should not give any loan at all to the party. So if AAA, so straight away it goes to D rating, then additional interest to be charged, 1.50. So as per the guideline, the new guideline introduced in 349/29, whenever the external rating is done, when the risk rating of the borrower comes down by one notch, you have to charge 0.50%. If the risk rating has come down by 2 or more than 2 notches, you have to charge additional 1%. If the risk rating come to, that is D straight away, then you will charge 1.50% more. So similarly, you see AA to A, one notch, or AA to BBC, etc., or AA to D. Like that, one notch and more than one notch, what is the additional interest to be charged? Let us see the question now. You'll be able to answer. Or I will see that is the next slide. What is there? Okay, this is internal rating. So in external rating, you have to see it like that. Now you see the question. You'll be able to answer. Question number 9. What is not the guideline with regard to charging additional interest in the case of downgradation of external rating in respect of borrower accounts? When you will do external rating, so above 25 crores exposure. Who does the external rating? External credit assessment institutions. Who are they? CRISIL, ICRA, etc. They are the external credit rating institution. When you have to do at the time of sanctioning the loan, at the time of takeover of the loan, then subsequently every year based on the audited balance sheet, you have to do the external risk rating. Before, when it has to be done? Before October. If the party, when the parties, what is the last date for it? The parties have to give the balance sheet by October. If the parties are not giving a balance sheet by October, you have to charge additional interest to the borrower's account, isn't it? Those are all the guidelines. Now you see the question. What is not the guideline with regard to charging additional interest in the case of downgradation of external rating in respect of borrower accounts? Point number A. Downgradation from BB to B, additional interest 0.50. So you know AAA, AA, A. Then you have triple B, double B, B. Okay. So double B to B, so you are getting only one notch down. So whenever there is one notch down, 0.50 only you have to charge. So point number A is correct. Okay. Then point number A is correct. Then point number B. From BB to C, additional interest to be charged is 0.75. So BB, what is that BB to C? So BB to B, there are, triple B, double B, B, C. Okay, now from where to where it has gone? From double B to C. You see the PowerPoint presentation from double B to C. So from double B to C, if it goes, you have to charge 1% more. So what the option given here, you see, point number 9. So there is option B. From double B to C, additional interest 0.75. It is additional interest to be charged 1%. So point number B is not correct. Let us see any other point is not correct. From BB to D, additional interest 1.50, correct. Anything it goes to D, 1.50. From BB to D, 25% additional collateral to be obtained within 6 months, and if not, additional interest of 1% over and to be, I think I have not showed the PowerPoint to you. So I will show the PowerPoint that also to you. See, it's not there. Okay. See now. So now we know that is from one notch it goes down 0.50, more than one notch 1%. If it goes to D, 1.50. Now you see, related to that, this point I have not covered, I will tell you. Suppose if the risk rating has come down by more than one notch, that is from AAA, it has gone to A, let us assume. With AAA to AA, it should come. Instead of AAA, it has not gone to AA, it has gone to A, B, 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 etc. Anything more than one notch, besides charging the additional interest. Okay, by 2 notches, what is additional interest? 1%. If it is D, 1.50. Okay. So if downgradation is by 2 notches and more, 25% of additional collateral in the form of immovable properties or any other approved securities to be obtained within 6 months of downgradation. First, you have to charge 1%. Okay. Besides charging 1%, whatever the collateral the borrower is having for the loan, you have to ask for 25% additional collateral. So by means of what? Land and building, or by approved securities. What are all the approved securities? LIC policy, NSC, your fixed deposits, or gold. These are all the approved securities. Ask the borrower to give additional security of 25% over and above the present security, either in the form of land and building or in the form of approved securities. So within 6 months of the downgradation, if the borrower is not able to give within 6 months, you have to charge. Already you are charging 1% more, isn't it? If it is D, you are charging 1.5% more. Already you are charging. So besides charging that, within 6 months, he has to give additional collateral. If additional collateral not obtained within 6 months, additional interest of 1% over and above the additional collateral shown in the table, additional interest shown in the table to be charged. See, if double notch, if 2 notches down, 1%. If it is D, 1.5. So you have to charge first. Then second, you should ask the borrower to give 25% additional collateral. What is the period? Within 6 months. Within 6 months, if he is not giving, you charge him 1% more than what is shown in the table. For example, from AAA to A, that is, you are already you have to charge 1%. Now one more 1%, 2% you have to charge. In all the cases, the concerned sanctioning authority can reduce the additional interest, additional collateral, etc. That is a discretion that you leave. Now let's go back to the questions. You will be able to answer all the points. Question number 9. What is not the guideline with regard to charging of additional interest in the case of downgradation of external rating in respect of borrower's accounts? Downgradation from BB to B, additional interest 0.50. That is correct. Point number B. From BB to C, additional interest is 1%. So point number B is wrong. Point number C. From BB to D, additional interest 1.50, correct. Point number D. From BB to D, that is down to more than 2 notches. No, from BB to D, wherever it is more than 2 notches, if it is BB to D, 25% additional collaterals to be obtained within 6 months, and if not, additional interest of 1% over and the 1.50 to be charged, correct. So for question number 9, your answer should be point number C. Question number 9, answer should be C. So the correct answer should be 1%, and it is not 0.75%. Okay, sir. So similarly here, for internal rating also, interest you have to charge, additional interest. So that also I will tell you. So far we saw about the external rating. Now, so internal rating. When you do the internal rating, you will get CNR1. What is the CNR1? Minimal risk 1. CNR2, minimal risk 2. CNR3, low risk 1. CNR4, low risk 2. CNR5, low risk 3. Then CNR6, normal risk. Like that it is there. Okay, up to default grade. So D is the default grade. You should not do the loan at all. So when you do the internal risk rating, the risk rating grade will be like this, and the narration for that is like, suppose if they ask in the exam CNR4 or CNR5 as per the internal risk rating, if the borrower gets the mark which is CNR5, what is the narration for that risk grade? It is low risk 3. So you should know this table also. That is why I have spent the time and prepared this. Okay. Now, in the internal risk rating, we will see. So, starting from CNR1, I have gone up to CNR10. Okay, I have gone up to CNR10. Let us see. If it is one gradation is CNR1, first is CNR1. If it is slips to CNR2, like that, one notch down 0.5%. If the notch is more than one, that is you have to charge 1%. Internal rating also like external rating. If it goes to default, it is 1.50. Same thing, sir. CNR1 to CNR2, 0.5. CNR1 to other than CNR2, that is you'll get 0.1%. If it is CNR1 to D, you have to charge 1.5. Like that, all the things I have given here. Now, this I told you, no, the additional collateral that is applicable both for internal rating and external rating. In both the cases, if it is more than one notch, two notches and more, you have to charge that within 6 months collateral to be given. Otherwise, you have to charge additional 1%. Over and above the additional interest, already you are charging as per the table. Concerned authorities can give waive discretion for that. So, the additional interest both for internal risk rating and external risk rating. Now, let us go to question number. So, question number 9 we have seen. Now, we are seeing question number 10. As per HO Circular 349/23, what value to be considered for old vehicles? Depreciation at 20% per annum on written down value. Depreciation at 15% per annum as per straight line method. Insured declared value or after applying the depreciation at 20% per annum on written down value, whichever is higher. Point number D. Insured declared value or after applying depreciation at 20% per annum on written down value, whichever is lower to be considered. So this has come in this year. So far, what we have been taking for vehicle insurance, valuation, originally as per the invoice, you take the valuation. Then every year, we will apply 20% that is depreciation on the written down value method. From this year, bank has changed the policy 349/23. You have to now compare what is in the insurance policy, what is the value of the vehicle is taken, or you find out 20% depreciation on the written down value. Between the two, whichever is higher, you have to take the valuation for the old vehicle for that particular year. Okay, again I repeat. So insured declared value is the new concept that it has come from this year. So either you have to take insured declared value or you have to take the 20% depreciation on the written down method. Both you take, you compare whichever is more. Whichever is more has to be taken for the valuation of the old vehicle. That is in the second year onwards you have to do. Or when you are going to finance for the vehicle also, the value you have to take, no, you have to take it like this. So as per HO Circular 349/23, what value to be considered for old vehicles? What is there? The answer is here, you see. Point number C, you see. Insured declared value or after applying depreciation 20% per annum on return down value, whichever is higher. Question number 10, your answer should be C. So PowerPoint I have made. Now question number 11. Normally, revaluation of immovable property taken as collateral other than for retail loans to be taken once in 3 years in respect of standard assets. If valuation is carried out at a frequency less than dash months, value of the property to be taken as at 85% of the latest valuation and valuation to be given by a valuer other than the one who gave earlier valuation. I will explain. Friends, as per 7 bar 2023, I told you who has to take valuation, what is the periodicity for taking valuation with regard to agricultural land, farmland, or land with structure. Within 3 years, or once in 3 years, once in 5 years, and who has to do the valuation, we already seen. Now, you would already read with regard to retail loans. When there is periodical valuation to be done. Last year, that is in the year 20 or 2021, guidelines have come. Whenever a retail loan is given, periodic evaluation of the retail loan also to be taken. The collateral or prime housing loan, house is a prime security. Canara mortgage, the property is a collateral security. Canara rent, the property is a collateral security. Canara LRD, the property is a collateral security. So there are few that is retail loans where mortgage transaction has been taken place. Periodical valuation also to be done by for them. What is that is periodicity of valuation, periodical valuation of retail loan? This is not there in the question. I'm explaining that one also. So in the case of a retail loan, if the liability is 50 lakhs and above as at the end of previous March, for example, we are in the year 2023-24. Now, which are all the retail loans periodical valuation to be done this year? So you take March 31st, 2023. What are all the retail loans are in your branch? Which are all the loans with mortgage transaction, either prime security or collateral security, where the liability is 50 lakhs and above as on 31st March. For those loans only, you have to do periodical valuation, that too once in 5 years only. So retail loans, periodical valuation once in 5 years. So provided the liability in the account is 50 lakhs and above as at the end of previous March. That is for retail loans. Certain retail loans where mortgage transactions have taken place, where the property is either prime security or collateral security. Over, sir. Agriculture, when valuation to be taken. So once in 3 years, once in 5 years, who has to do the valuation? That is also over. This valuation with regard retail loan, panel valuer has to do the valuation. Then coming to other than this, for example, in MSME loan, the property is taken as the collateral. So when you will do the valuation for MSME loans also, at the time of sanctioning the loan, subsequently, normally once in 3 years, you have to do the valuation. And friends, so the MSME loan quantum or interest is also linked to the collateral security, isn't it? So whenever, for example, let's assume you are charged to the borrower, there is also 10% rate of interest because he has given 150% or 200% collateral security. So what has happened? So or you are given a sanctioned a loan of 1 crore. So now normally you are sanctioned a loan of 1 crore, and then let us assume the collateral value is 2 crores as on date. Now, so the next valuation for the borrower comes only after 3 years normally. But this loan, you are given the loan quantum of 1 crore, taking on the value is as 2 crores. Now the borrower after 2 years, he will come to you. He will come and say, so he will not wait for 36 months. He will come and say after 2 years or 1 year, he will come and tell, sir, so the value of my property appreciated like anything in that area. So metro rail has come up, a metro station has come up, etc., etc. So please revalue my property and give me more loan. So whenever the MSME loans are linked to the value of the property, sometimes the borrowers will ask us to do revaluation within a periodicity of not 3 years, less than 3 years also. Now let's see the PowerPoint presentation. Valuation of immovable property once in 3 years. So whenever you are given not for agriculture, not for retail loan, normally for an MSME loan, once in 3 years, circulated CAC can reduce the frequency to allow concession in interest rate and for additional credit also. Borrower comes and tells you, sir, don't wait for 3 years. Please do the revaluation now itself because my property has appreciated. So give me more loan or reduce the rate of interest for that. If the valuation is carried out at a frequency of less than 33 months. So normally you have to do once in 36 months. So here, till last year, they were mentioned as less than 36 months. This year, they have changed. Wherever there is a change, they have put in a different color. So if the valuation is carried out at a frequency of less than 33 months, circulated CAC can permit it. Normally once in 3 years. If the valuation is carried out at a frequency of less than 33 months, earlier it was 36 months, value of the property, so then you are doing, let us assume circulate feels that yes, the value has appreciated, so we can give more loan based on the value. Then in that case, he can order for revaluation of the property. When the revaluation is done within a period of less than 33 months, and you have to take what is the market value of the property. You cannot take 100% of the market value of the property. You have to take only 85% of the latest valuation as per the latest valuation report and link it to the loan amount or concessional rate of interest. Here, what 3 points you are getting? Valuation of the immovable property, you know, for agricultural land. Valuation of immovable property for retail loans, already explained to you. Other than retail loans, when the valuation comes, revaluation comes, normally it is once in 3 years. But if you do a revaluation less than 33 months, who can permit? Circulated CAC will permit. For what purpose? There is concessional rate of interest or for additional loan. When they permit, when the valuation is done less than 33 months, then whatever the valuation is given, you need not take the entire valuation as the value of the property. You should take only 85% of the value of the property. That was given in HO Circular 349/29. Now you see, from this question, any type of question they will ask. So what is the value of the property to be taken? 85%. So with less than what month? 33 months. Then who is the authority to permit? Circulate CST. Three types of questions will come from this presentation. See, normally revaluation of immovable property to be taken as collateral other than for retail and agriculture to be taken once in 3 years in respect of standard assets. If the valuation is created at frequency less than 33 months, so either 33 months they can ask you, or they will give you 33 months, they will ask you what percentage you can take. And at that time, you have to tell 85%. Then sometimes they will ask who is the authority who can permit for less than 33 months. Then circulate CAC and above authorities. So here the answer is not 36 months, not 24 months, not 12 months, none of these. It should be 33 months. Okay, friends. So we are not only seeing the answer for these questions, we are seeing what probable questions that may make the examiner to ask you other than that. So whenever in the exam, examiner is taking a subject for setting a question, the question will come for all the three levels. So your exam is on 11th November, 1 to 2, 2 to 3, 3 to 4. So if suppose if he has taken this question, then for 1 to 2, he may ask months. For 2 to 3, he may ask, what do you say, what percentage can be taken. And 3 to 4, he may ask, who is the authority to permit it. So please be thorough with the entire concepts. So understanding the concept is more important rather than seeing the answer immediately. Good, sir. Question number 12. So far, risk rating of an account, I think morning I saw Mr. Reddy was telling to you. So far, risk rating of an account other than retail lending is based on the score obtained in various risk rating models, isn't it? That is CNR1, CNR2, CNR3, that is minimal risk 1, minimal risk 2, low risk, normal risk, moderate risk, high risk, etc. You do the risk rating model, whichever model, exposure up to 2 lakhs, 2 lakhs to 20 lakhs, 20 lakhs to 2 crores, 2 crores and above. You do the risk rating and give the ranking, find out what is the mark the borrower is getting. As per the risk rating mark he is getting, then you will say whether he is a low risk borrower or a normal risk borrower, etc. From this year, with that is when you are going to rank a borrower as a high risk borrower, the mark alone is not the consideration. Besides the mark, 2-3 things also you have to take into account. For example, you are doing risk rating. You find out the mark the borrower is getting, which is equivalent to moderate risk. You can normally till last year you can classify him as moderate risk. The mark is equivalent to moderate risk or normal risk. But now you find out that the account is continuously classified as SMA2 in the last 3 months. The critical amount is coming and paying the last day. Okay, so last 3 months the account appears in SMA2 continuously. Interest coverage ratio is less than 1, or interest coverage ratio less than 1, or the current ratio is less than 1. If any one of these things or all these things has happened in an account, even though as per the mark, the party is getting only a moderate risk or normal risk, branch has to classify the borrower as high risk borrower. So for high risk borrower, mark alone is not the criteria as per 349. These three factors are also the criteria. Suppose they may say, besides that is account appearing in SMA2 in the last 3 months continuously, interest coverage ratio less than 1. What is the other ratio which will affect the risk rating of the borrower? You should know the current ratio is less than 1. You see, so far risk rating of an account other than retail lending is based on the score obtained in various risk rating models. But as per HO Circular 349/23, additional parameters that are to be taken into account to classify the account as high risk. So mark only is not the criteria. High risk or account continuously classified as SMA2 in the last 3 months, interest coverage ratio is less than 1 and current ratio is less than 1. Answer for the question is B. Question number 12, answer is B. High risk is the criteria. This is the criteria I have given. So far, the classification of account for high risk is based on the MARS revised guidelines HO circular. Additional parameter to be taken into account while risk rating to classify the high risk is account continuously classified as SMA2 in the last 3 months. Interest coverage ratio is less than 1. Current ratio is less than 1. So one more point I have forgotten to put in the question here also, you can see. So we have been seeing the valuation, no? Agriculture one is what is the periodical valuation, retail loan, what is the periodic valuation, and then MSME loans, collateral, what is the periodic valuation. Valuation of an NPA account. Okay, all types of loans, whether agriculture or MSME or retail loan, branches should ensure first availability of the security. So 1 quarter cooling period to be given for upgradation. You need not immediately go for revaluation once the account slips to NPA. If not upgraded, they may ask what is the cooling period you have to give for do revaluation for an account when it slips to NPA. That is for revaluation. You have to wait for 1 quarter. 1 quarter cooling period to be given. So during that period, if it is not upgraded, so whether you have to do for valuation or not, valuation to be taken within 6 months of the account slipping to NPA, provided the unexpired period of the existing valuation is 6 months or more. So already last year you have done at the time of sanctioning the loan or subsequently or renewal or somewhere you have done one valuation in BAM 74 or something, you updated the valuation. Let us assume what is the date of valuation. You find out when the account slips to NPA. You wait for 3 months. After the 3 months is over, if the account is not upgraded, you find out what was the last date of valuation. If the unexpired period of valuation is at 6 months or more, so then revaluation to be done that is within 6 months of the account slipping to NPA. That is why you already waited for 3 months. So account slipped to NPA, waited for 3 months before completion of another 3 months. That is from the date of account slipping to NPA, within 6 months you have to do the valuation, provided the unexpired period of the earlier valuation is 6 months or more. On the other hand, if the existing valuation has already completed 3 years, when the account slips to NPA, then fresh valuation to be taken immediately and once in 3 years thereafter. This is the guideline with regard to valuation, all types of loans when the account slips to NPA, when the land and building or some collateral is taken. For provisioning of NPA, the realizable value of the security mentioned in the valuation report to be taken. So when you are going and updating the value of the property in BAM 74, whatever it is, you have to find out in the, because the account has already become NPA. In all other cases, you will give the market value of the property. But in the case of an NPA account, when you are updating the value of the property, the CBS fast path, you have to take the realizable value of the security given by the panel valuer. So in the valuation report. So for NPA account, when you will do the valuation, so for all types of accounts, so that is first ensure security is available. Yes, he's having a house. Yes, he's having a house. When I will go for valuation, the account slips to NPA, wait for 1 quarter. Then after 1 quarter is over, whether you have to do it within 6 months, the account slipping to NPA or not, you have to see what is the last date of valuation. If the unexpired pay 6 months and above, then within 6 months of the account slipping to NPA, do valuation. Already if the 3 years is over, please do the revaluation immediately. Okay, then fresh value to be done immediately. and the realizable value, and then subsequently once in 3 years it has to be done, and the realizable value of the property as per the valuation report to be uploaded in the CBS fast path. So 4-5 points are here in this that is a presentation. Please go through it. It is in a circular 349/23. So these are all the changes. So far some other different thing was there. Now changes have been brought about. These changes are subsequently followed in your credit policy, etc., etc. Okay, sir. Good. We will see now. Quickly, quickly we will go through. Okay, now, so we were talking about, that is, sorry, question we'll see. Then if we see it, you will understand. Okay, sir, good. So risk rating. So question number 12, we already seen B. Answer is B. Question number 13. Exposure of above 25 crores are to be rated by external credit assessment institution. So why I am giving the expansion is, if they ask you to expand ECAI, you should be able to write external credit assessment institution. So exposure of above 25 crores are to be rated by external credit assessment institutions, ECAI, besides internal rating. Okay, so internal rating is a must. And when the exposure is above 25 crores, get it done by the external agency also, if unrated by ECAI. So why parties will not be willing to do ECAI rating? So last year you are given the loan, ECAI rating is done above 25 crores, AAA or AA. You are given the loan, rate of interest is fixed, sanctioning authority is fixed. This year, you are asking the party balance sheet and you say, so you should get the party's consent to do the ECAI rating. You have to give the balance sheet, or party has to give it the balance sheet to the external risk rating agency for external risk rating. So parties may be hesitant to do the external risk rating this year. What may be the reason? Because that is the business is not good. So the balance sheet, when the external risk rating does the external risk rating, they may find out it is not AA as like last year, it is BB this year. So they don't, once the external risk rating is done, so that has to be published in RBI website and the company's website, etc., etc. So the parties will be hesitant to do the external risk rating. So whenever the external risk rating, suppose the external risk rating to be done, exposure of about 25 crores, if the parties are not willing to do two things, so you have to take up the matter with the appropriate authority who has to permit waiver of external risk rating. In the bank, who is the authority to permit waiver of external risk rating? EDCAC. So Executive Director, CAC, Credit Approval Committee, is the authority who will permit waiver of external risk rating. If the external risk rating is waived, so borrowers have to be charged additional interest. Okay, now the question is 25 crores and above external risk rating. So why borrowers may not be willing to come for external risk rating? If external risk rating has to be waived, who is the authority to waive the external risk rating? EDCAC and above authorities. And then whenever the external risk rating is waived, additional interest to be charged to the borrower. This year there is a change in the additional interest where it is given 378/23. Subsequently, it is carried over in the revised policies today also. So ECAI rating, additional interest for externally unrated accounts. Externally to be done rating, but they have not got it done. Externally unrated accounts. Exposure above 25 crores up to 100 crores, additional interest to be charged is 0.50. Till this circular was issued, additional interest charge is 0.25. You may ask me, sir, why you are giving the previous, already it is 0.5. Sometimes in the exam they are asking, for example, exposure above 25 crores up to 20 crores, additional interest to be charged increased from dash to dash. At that time, you should know till last year what was the additional interest rate. So it was 0.25. So exposure above 25 crores up to 100 crores. If ECAI rating is waived, you have to charge 0.50. And above 100 crores, you have to charge additional interest of 1%. Earlier it was 0.50. So 0.25 has become 0.0, 0.50 has become 1%. So wherever the ECAI rating is waived, so the waiving authority, EDCAC, has to again specifically say you need not get the additional interest. If in the sanction nothing has been told about the additional interest, even though ECAI rating is waived, additional interest to be collected. Whether additional interest need not be collected, for not collecting the additional interest, that authority, EDCAC, has to give you specific permission. Even in cases where ECOI rating is waived by the specific authorities, additional interest as above to be collected unless specifically permitted by ECOI rating waiving authority. Now, let us see the question. You will be able to answer. See, exposure of above 25 crores are to be rated by external credit assessment institutions besides internal rating. If unrated by a COI, additional interest to be charged, which is not relevant, which is not correct. You have seen what is correct. Now you tell me which is not correct. Question number 13. Point number A, exposure above 25 crores up to 100 crores, additional interest 0.25. That is wrong. That is changed from 0.25 to 0.50. So question number 13, answer is A. What is B? We'll see. Above 100 crores, 1%. That is correct. Even in cases where a COI rating is waived by the appropriate authority, additional interest to be recovered unless specifically permitted. That is also correct. All are relevant guidelines. No, not all are relevant guidelines. A is not correct. So 0.50. So question number 13, answer is A. Question number 13, option is A. Okay, sir. Good. Question number 14. In respect of loans to commercial real estate exposure, valuation of property to be taken once in 3 years. As per HO Circular 378/23, if CRE exposure account appears in SMA 1 or shows any early warning signals or on occurrence of any adversities affecting the marketability of the property, valuation should be obtained once in how many years? Friends, I told you, so we'll see the PowerPoint presentation. Okay, COI rating, I told you what is additional interest to be charged. So valuation in respect of loans to commercial real estate. You know, normally once in 3 years, the valuation, what is a commercial real estate loan? When you are giving loans for very big projects, that is non-priority loans. For example, like your cinema theater or shopping mall, very big loans you are giving, no, that is commercial real estate. So those loans also, you will do the valuation normally once in 3 years. But the account appears in SMA 1, shows any early warning signals, okay, the account is going to slip to NPA, a lot of problems in that account, or an occurrence of any adversities affecting the marketability of the property, you find out some fraud is happening there, you may not be able to dispose the property, you cannot sell it, the account goes to NPA. If you smell all these things, then for the commercial real estate, valuation to be taken once in a year. Normally once in 3 years. Now, if these three adversities are you find out, then you have to take valuation once in a year. HO Circular 378/23. Okay, sir, these are all the changes, friends. My dear friends, questions may come because they told questions will come from circulars. So again, these things are reproduced in the current the other policies also. Okay, somebody is there on the call. Okay, sir. Anything is there? 1 minute, 1 minute. I'm just seeing anything is there. Thank you, thank you. Okay, good. So this is nothing related to my class. Okay. Then question number 15. At the time of takeover of agricultural loans, question number 15. At the time, so for question number 14, answer is none of these because it should be once in a year. Commercial real estate, once in a year. Option once in a year is not there. So none of these is your answer. So you should write for question number 14, answer is D. Question number 15. At the time of takeover of agricultural loans, sanction communication of previous banks, including modification, if any, to be obtained and analyzed, verified for how many years as per HO Circular 378/23. 1 minute, sorry. Somebody is troubling me. 1 minute, sir. 1 minute. Okay, okay. Now, so now there's a change, sir. Let's quickly go through the presentation. That's why I make the presentation and the question. All other things are also can be brought over here. Okay, now you see, there is a change in the takeover norm this year, 378/23. You know, there are various takeover norms up to 100 crores, above 100 crores, MSME loans, agriculture loans, retail loans. I'm not discussing in then and the credit policy or delegation of power, those authorities will be covering that. Now I am covering a change that has come in the takeover. See, if proposed borrower clears the liability in other banks from his own sources and approaches our bank for credit facilities after 3 months of such proposals, these proposals to be kept out of the purview of takeover now. For example, a borrower has already availed a loan in another bank. He is coming for a loan to you, but that loan he has cleared out of his own resources and already 3 months is over. So when he comes to you, so if he comes within 3 months, you have to consider, even though he has cleared out of his own sources there, but if he comes within 3 months, all takeover norms to be applied. But here, if the cooling period is 3 months, 3 months is over. If he's coming to you, then you need not consider it as a takeover. Normal loan you can consider and process the proposal. This is the normal guideline, sir. This is a common basic guideline. There is a certain deviation, certain relaxation has come this year. So banks shall obtain the details of dealings with the bank financial institution in such cases also and satisfy about itself about the operation. So what I am telling, if the borrower closes out of his own sources and comes to you for a loan within 3 months, all takeover norms to be applied. If he is coming after 3 months, all takeover norms need not be applied. But one thing you have to do, what is that? You have to find out the dealings of the party with the other bank. Or what is when the loan was sanctioned, when he has closed. So the dealings have to be analyzed and put up in the office note, even though it is not a takeover. Okay, that is over. Now the second point. Here, what is the minimum period? 3 months, I told you, no. So within 3 months, it is takeover. Beyond 3 months, it is not takeover. But you see, with regard to retail and agriculture, this is a change in this year in a Circular 378. With regard to retail and agricultural loan, other than food and agro processing, the cooling period is only 10 days. So he has closed a retail loan and coming to you within 10 days, if you are going to give you a fresh retail loan, he has closed out of his own, so it is not closed out of his own sources. First point I have put, you see, from his own source. He has closed out of his own source a Canara mortgage type of loan with other bank. Within 10 days, if he comes to you, you have to apply the takeover norm. But if it comes after 10 days, then it is not a takeover. So for all other loans, 3 months is the cooling period. For retail trade and agriculture, other than food and agro processing, the cooling period is only 10 days. Either 30 days or either 3 months or 10 days. Either after 3 months or after 10 days, you have to get the balance sheet, etc., etc. Other banks dealings, you have to analyze, even though it is not a takeover. That is over. Then next point is, so the first 3 points is the cooling period changed from 3 months to 10 days. Okay, whether it is even beyond 3 months or beyond 10 days, this has to be done. Now, coming to takeover. Whenever a loan is taken over, whether agriculture or MSME or retail, etc., takeover norms, etc., you know. Sanction communication of previous banks, including modifications, if any, for the last 3 years shall be obtained, analyzed, and verified. So whenever, so the first 3 is the cooling period. This is with regard to takeover. Whenever a takeover of loan takes place, when it is takeover, I already explained to you. Whenever a takeover of loan takes place, that is, you have to take from the previous bank the sanctions and renewals of the last 3 years to be obtained and analyzed and verified in your office note. But this year, what they made with regard to takeover of agricultural loan, when agricultural loan you are going to take over, the above condition is relaxed to last 1 year only. So what are the changes in 378? The cooling period for takeover, which need not be considered as takeover, for normal loans is about 3 months, and for agriculture and retail, other than agro food processing, it is 10 days. That is one change. What is the other change? So in respect of takeover, so when the takeover has been taking place and last 3 years sanctions you have to take and analyze. But with regard to agriculture, it is sufficient if you take last 1 year's renewals or sanction from other bank and analyze. Now let us see the question. This is the one change, sir, with regard to takeover. Okay, now we'll be able to answer, you see. Question number 16, which is not a guideline. We are seeing question number 16, sir, which is not a guideline as per HO Circular 378/23 in respect of takeover of loans from any bank where any, sorry, okay, question number 15. Sorry, sir. Sorry. At the time of takeover of agricultural loans, sanction communication of previous bank, including modifications, if any, to be obtained and analyzed, verified for how many years as per HO Circular 378/23. You know, for agriculture and retail, agriculture other than food and agro processing, it is 1 year. So question number 15, answer is C. Question number 15, answer is C. Okay, question number 16. Which is not a guideline as per HO Circular 378/23 in respect of takeover of loans from any bank where any of our bank's whole-time directors have worked earlier. There is a change, sir. So maybe for 3 to 4 or 4 to 5, you can expect the question. Even for 1 to 2, we cannot say. Okay, now let us see. Now, this is a change. So far, I will tell you, then I will go into the slide. So far, till this 378/23 has taken place, whenever a loan is taken over from other bank. So, in that other bank, if our MD and CEO or executive directors, if they worked in the other bank, okay, so far, what is the guideline for takeover of loan? The loan which you are going to take place from some other bank, in that bank, our MD and CEO or executive director worked earlier, those loans for takeover to be permitted by MC of the board only. MC means management committee. Okay, so again I repeat, so far the guideline before 378 is whenever the loans that is to be taken over from other banks, in the other bank our MD and CEO worked earlier or any of our executive directors worked earlier, these loans to be permitted takeover by management committee of the board only. So these two people, that is MD and CEO and executive director, they are called whole-time directors. Besides whole-time directors, there will be some more whole-time directors also appointed by Reserve Bank of India. So this year, what they are told, they are not restricted this sanction only for MD and CEO or executive director. They brought all whole-time directors into the guideline. Takeover of credit proposals by the bank from any bank where any of our whole-time directors have worked earlier. So earlier, it was only MD and CEO and ED. Now, any of our whole-time directors include MD and CEO and executive directors and somebody appointed by the Reserve Bank of India, whole-time directors, part-time directors, independent directors, like this, the whole-time directors. Any whole-time director worked with any bank, and from that bank you want to take over a proposal this year, from this year onwards, who has to sanction the proposal and whose prior permission is required or not. You see, 2 points are there. Questions may come. I do not know whether questions will come out, but this is expected. 378/23. Chief General Manager and General Manager HOCAC to permit such takeover up to the delegated power. See, earlier it was only MC of the board only to sanction. For whom? MD and CEO and ED. But now for all whole-time directors, including MD and CEO or ED, so CGM, GM, HOCAC can permit such takeovers up to the delegated powers. After taking over, so a monthly information note to be placed to the CAC of the board. That's all. So again, I repeat. So whenever a loan is taken over from other bank, where any of our whole-time directors worked earlier, so that is all those loans up to CGM HOCAC or GM HOCAC to be permitted by them up to the delegated authority. In circle, nobody is having the power. So once the loans are sanctioned up to their powers, monthly information report to be placed to the CAC of the board. Here from this, any question they may ask, whole-time director, who is the authority? Earlier, who was the authority? Then what is the periodicity of placing the information note? To whom the information note to be placed? So CAC of the board, monthly. Let's say you have to be very specific. In between the lines, you have to read the circulars. Then, suppose beyond the CGM, GM, HO, CAC powers, who has to sanction that type of takeovers. Beyond CGM, GM, HO, CAC powers, sanctions of whole-time directors, if they work in another bank, takeover of loans from those banks to be permitted by MC of the board, and such sanctions to be placed to the board of directors for prior clearance. You see the difference between the two. Again, I repeat, you forget about the last year. From this year onwards, any of your whole-time director worked in other bank, and if Canara Bank wants to take over a loan from that bank, who has to sanction? CGM, HOCAC up to the delegated powers can sanction the loan and a monthly information note to be placed to the CAC of the board. And beyond the powers of CGM, HOCAC, all the loans of such loans to be sanctioned only by the MC of the board, but before releasing it, they have to sanction, but before releasing it, prior approval of board of directors is required. First case, monthly information note. Second case, prior approval of the board of directors is required. So any question will come. This is a change, sir. This is a change. Say question number 60. Which is not a guideline? That is, which is not there. It is a negative question. So that is why I put is not there. This point is not in the circular. Which is not a guideline as per HO Circular 378/23 in respect of takeover of loans from any bank where any of our bank's whole-time directors have worked earlier. MC of the board only to permit such takeovers. No, that is not correct. Point number B, CGM, HOCAC to permit such takeovers up to the delegated powers and place a monthly note to CAC of the board for information. Correct. Point number B is correct. Point number C, beyond CGM, HOCAC powers, proposals to be permitted by the MC of the board and such sanctions to be placed to CAC of the board for prior clearance. Correct. D, none of these is not correct. So which is not correct? Point number A is not correct. So MC of the board only to permit earlier, last year up to 378 circular was issued, ED and MD. So MC of the board only to permit. Now all old-time directors have to be brought under the picture. Then CGM, HOCAC also has given a power. And beyond that, MC of the board has to permit, but prior clearance from the board to be obtained. Okay, sir. Question number 16, answer is A. Question number 16, answer is A. Question number 17. What is the maximum number of accounts that can be entrusted with agencies for specialized monitoring at a time as per HO Circular 374/23? So, friends, HO Circular 374/23, I do not know whether somebody has covered for you. It is a detailed circular in credit review and monitoring policy of the bank. Credit review and monitoring policy of the bank, a detailed circular. One change has come in that. That is with regard to agencies for specialized monitoring, ASM. So, what is that ASM? Brief 2 minutes, then we'll go to this question, other question. See, when the exposure to a party is 250 crores and above, 250, when the exposure to a party is 250 crores and above from the entire banking system, not only from Canara Bank, when the exposure to a party is 250 crores and above from the entire banking system, and if Canara Bank has financed to a party once in a quarter, these accounts are to be monitored and with an agency, and that agency is called Agency for Specialized Monitoring. Bank has made various people in that panel. This agency bank has to give wherever the exposure is 250 crores and above to a party, not only from Canara Bank, from the entire banking system, wherein you are also lent to that point. Your share may be only 10 crores, but from the entire banking system, you would have taken 250 crores and above. So those that is parties' loans to be continuously monitored by an agency called Agencies for Specialized Monitoring. Fees are there for the agency. When somebody takes the credit monitoring, they will tell you in detail about that. So what I was trying to tell you, what is an agency for specialized 250 crores and above? That question was last time. But year before, so last time, in a year, the maximum number of accounts to be given to a agency for specialized monitoring, what is the maximum number of accounts that can be given? Till last year, it was 5 accounts. But from this year, it is only 3 accounts. So we are not worried only about the answer now. So you got some point about the agencies for specialized monitoring, 250 crores and above, not only from Canara Bank, from the entire bank. The period is once in a quarter, they have to place it. They have to give information and about the party, and the information note will be placed to the appropriate authority once in a quarter. So fees are there for them. So now at any part, so in a year, you can give to the agency only 3 accounts. Not more than 3 accounts. Last year circular, it was 5 accounts. So answer for question number 17 is, that is A. Answer for question number 17 is A. Okay, 374/23, somebody will take you in data. Then question number 18. each borrower to avail all credit facilities from a single branch as per HO Circular 383/2023. This delegation of the first it has come. Subsequently, it has come in other circulars, except gold loan, loan against our deposit, loans against approved securities, housing loan. Your options are, you see this type of options are also they are giving. They'll give 1, 2, 3, 4, 5. Then they will give A. So A is 1 to 4 all. B 1 and 2 only, C 1 only, D 2 only. Like that, you have to choose A, B, C, D. So this type of multiple there is choices also they are giving in the exam. Let us see that particular PowerPoint. 2, 3 points are also there. Let us not worry about it. Okay. Whether borrower can avail credit facilities from more than one branch. Each borrower to avail all credit facilities from a single branch only. So in the earlier circular, they have not mentioned any other loan they can take from any other branch. In 383, they made it very clear. Each borrower to avail all credit facilities from a single branch only, except loans against our deposit to depositors. So, loans against deposit to third parties. That cannot be accepted. So, loans against to depositors, loans against deposit to the depositors themselves, that only is permitted from another branch. So that means whether it is gold loan or whatever may be the loan, all borrowers have to avail the credit facility from a single branch of the bank only, except loans to depositors against the depositors for them, not to third parties. Okay, very clear. Then, if customer needs finance from another branch, okay, so customer says, no, sir, I will avail another facility. I am purchasing the house property near my branch, there is a house, I will take the loan from that branch. If customer needs finance from another branch, circle has to permit it. Circle at the CAC of the branch in which facility is sought to permit the same. For example, you take a Chennai circle. So in Chennai circle, in Chennai, he may be having a loan, a business loan. He wants to avail a loan for a house in some other place. That branch may come within Chennai circle or it may come outside Chennai circle. So the circle head under which branch he wants the other loan has to permit for that is availing that loan in that branch. So that's second point. Then, whose permission is needed to transfer loan accounts of parties from one branch to another within the circle and to a different circle and apportionments of limits. So, party wants to transfer a loan from one branch to another. The branch will be within the same circle or the branch will be outside the circle, new circle also. Or a party has availed an OCC limit in a branch, they want to apportion it to various branches within the circle or outside the circle. Who is the authority? CGM, GM, HOCAC and above authorities only. Up to circle, nobody is having any power. CGM, GM, HOCAC for transfer of loans. Okay, sir. Now let us see the question. Okay, you'll be able to answer. Each borrower to avail the credit facilities from a single branch as per HO circular except loans against our deposit to the depositor. Okay, loans, suppose if they give the option, loans against deposit to the depositors, loans against deposit to the third parties. So loans against deposit to the depositor only to be permitted here. So the nearest option to the answer to the question is loans against our deposit. Question number 18, answer is 2. Sorry, what is the answer is 2. So what is the D? Yes, question number 18, answer is D. Question number 18, answer is D. What is D? 2 only. What is 2? Loans against our deposit. So question number 18, answer is D. Question number 19. Sir, this question number 19, 20, 21, the CGTMSE changes have come in this year. So quickly we will go through, you'll be able to understand, you already read in various places. Anyhow, those changes, questions are expected. 2-3 slides are there. I will explain it. So then you can in detail, we'll see the 3 questions because for all the questions, I will not be able, for all the points in the circular, if I start preparing the question, it will run 2 pages. That is why few questions I have put and few questions are in the presentation. So presentation also you have to read. Now, friends, all of you are aware the changes in the CGTMSE delegation guideline is coming in HO circular 433/23. That is a consolidated circular, latest circular in the bank. Ceiling for coverage increased from 200 lakhs to 500 lakhs. Already you know. So what is the maximum coverage? 2 crores to 5 crores. Again, please note, this 2 crores or 5 crores, whatever it is not the loan only from Canara Bank. It is a loan availed by the MSE borrowers from the banking system. So more than 5 crores, you would avail 1 crore from Canara Bank, 2 crores from some other bank. All the loans put together availed by him should not be more than 5 crores. It is borrower specific. It is not bank specific. These questions they may ask in the interview. Okay, ceiling for coverage increased from rupees 2 crores to 5 crores. Annual guarantee fee is based on the loan amount. That is a change. We'll see. Amount for waiver of legal action while invoking guarantee enhanced to 10 lakhs from 5 lakhs. Legal action waived accounts. Okay. Then settlement of claim for waiver legal action waived accounts. See now, CGTMSE, so legal action waived accounts amount enhanced to 10 lakhs per borrower. Now CGTMSE has CGTMSE has given two options to the bank. For example, you see, single installment of claim settlement by reducing the guarantee cover by 15%. That is, if the original cover is 75%, it will be reduced to 60% and settle. For example, let us assume you got permission for the waiver of legal action. The liability in the account, let us assume, is 10 lakhs. Up to 10 lakhs, it is permitted. Who is the authority to permit? We will see. So you got permission, waiver of legal action. Now, once a waiver of legal action is waived, you cannot go to court of law. You need not go to court of law. There is no need for getting AOD also. Now the account has to be closed. When you will get the permission for waiver of legal action, all other sources are exhausted. Okay, legal action is waived. Now that is 10 lakhs is the liability. Now you invoke your claim with the CGTMSE. Now, let us assume the guarantee coverage for that account is 85%. Let us assume the guarantee coverage for the account is 85%. No collateral is available, no primes, everything is over. The account became NPA. So now waiver of legal action is obtained. So you are going to see liabilities 10 lakhs. The guarantee coverage is 85%. Now the option for you is go to CGTMSE and say, sir, I have waived legal action for this 10 lakhs. The original guaranteed amount is 85%. You reduce 15% on that. 85 minus 15 is 70. You give me 70% of the 10 lakhs, I will go from you. So the option is for the bank to decide. Okay, the bank has to decide about the option. Okay, single installment of, that is settlement of claim for waiver of legal action accounts. So what is the maximum limit for waiver of legal action? From 5 lakhs to 10 lakhs, it is increased. Who is the authority to permit waiver of legal action? We will see. Okay, single installment. So waiver legal action 10 lakhs is waived. So the original guarantee coverage percentage is 85%. So lot of problems again, second installment, etc. So bank decided I will take instead of 85%, 70%, 15% less, 70% I will take 7 lakhs and close the matter. So single installment of claim settlement by reducing the guarantee cover by 15%. That is, if the original cover is 75, it will be reduced to 60%, single installment over. CGTMSE will not further entertain the proposal. Okay. Or two installments. First, you get 75%. For example, no, I don't want to reduce my coverage from 85% to 70%. I want 85% only. Okay, out of 10 lakhs, what is 85%? 8.50 lakhs. Out of that 8.50 lakh, CGTMSE first will give you 75% of the 8.50 lakh. So total liability is 10 lakh. Legal action waived. So the original CGTMSE coverage is 85%. 85% of 10 lakhs comes to 8.5 lakhs. So CGTMSE will not give the 8.5 lakhs immediately, because if you want entire amount immediately, you have to reduce by 15%, get and come out. But you don't want to reduce that 15%. You want the entire 85%. What the CGTMSE will say, now you are eligible for 8.5 because you want the full claim of 85%. So I will not give the entire 8.5 now. I will give 75% of 8.5 as the first installment, and the balance 25% as the second installment. When I will give the second installment? Second, after 3 years from the date of settlement of the first claim, or OTS, whichever is earlier. So I will give the second installment after that only. That is, you want the full coverage, 85%. If you want the full coverage 85%, first 75% of the eligibility will be given. The balance 25 will be given after 3 years from the date of settlement of the first claim, or OTS if taken place in that account, whichever is earlier, you will get the balance 25%. So you have to opt to CGTMSE. Which option bank will take? You cannot change by account. So Canara Bank has chosen the second option. Okay, so bank has opted for the second option. First, you will get the 75% of the original eligibility. Then balance 25% you will claim from CGTMSE after 3 years from the date of settlement of the first claim, or in between OTS has taken place before 3 years, whichever is earlier you can claim. Okay, that is a condition, and we are not gone for the first option. Then bank has opted for the second one. Proposals with aggregate outstanding credit facilities up to 500 lakhs is covered. I told you, aggregate credit facilities from the banking system, not only from Canara Bank, that are internally rated low, normal, and moderate risk to be considered for financing under CGTMSE. That means high risk accounts are not covered under CGTMSE. Let us see. Now, who is the authority to sanction a loan if the entire loan is covered under CGTMSE? We are going to see now. So this is a change in 433/23. See, friends, you know, renewal and that is sanctions of an MSE loan above 25 lakhs to be done by the MSME Sulabs only. The branches are attached by MSME Sulab, they only to do. But that is up to 25 lakhs, branches themselves can sanction or branches can renewal. Who can do the renewal, isn't it? Now, CGTMSE coverage. So, CGTMSE coverage and delegation of powers for branches. Okay, 433/23. Suppose let us assume an account, a borrower wants to cover an account 100% under CGTMSE coverage. Okay, credit exposure. So non-schematic MSME, MSC lending, non-schematic. Okay, non-schematic. So in the schematic, separately it be told. See, what I am telling is a normal CGTMSE loan you are giving, and if the entire loan you want to cover under CGTMSE, you know, above 10 lakhs, entire loan can be covered under CGTMSE also. So up to 10 lakhs, it has to be covered under CGTMSE. Above 10 lakhs, either under full CGTMSE or part collateral or entire collateral you can do. So if the loan, entire loan is to be covered under CGTMSE, if the loan quantum is above 10 lakhs up to 500 lakhs, so and if there is no collateral, again I repeat, the entire loan to be covered under CGTMSE. So the sanctioning authority wants to give the entire loan above 25 lakhs up to 500 lakhs. It may be 25 lakhs, it may be 30 lakhs, it may be 500, whatever it is. For loans of above 10 lakhs up to 500 lakhs, if there is no collateral to the loan, then branches cannot sanction the MSE loan. It has to be sanctioned by the next higher authority. Friends, you know, in Canara Bank, we have the MSME Sulab concept also. Branches can sanction the MSME loans up to 25 lakhs only. So MSE borrower is coming, he wants an MSE loan that is for 25 lakhs. But he says the entire 25 lakhs is to be covered under CGTMSE. In that case, even though the proposal originally need not go to MSME Sulab, since the entire loan is going to be covered under CGTMSE, it has to go to CGTMSE, MSME Sulab only. You see, even though branch is having power up to 25 lakhs, since the loan is to be, entire thing is to be covered under CGTMSE, even then the loan branch cannot sanction the loan. Similarly, so the borrower says, sir, some amount you cover under CGTMSE, some amount I will give collateral. In that case, whether 25 lakhs loan, MSE loan 25 lakhs, the borrower says, some portion I will give CGTMSE, some portion I will give collateral. Then what you have to see, what is the collateral availability? If the collateral availability is less than 50% of the loan amount, then also, even though the loan is 25 lakh, borrower is coming 25 lakhs, first he says, sorry, entire 25 lakhs cover under CGTMSE. You cannot sanction branch, even though normally you can sanction. This proposal you have to send to the next higher authority only. Suppose he come, sir, 10 lakhs, sorry, 25 lakhs or 20 lakhs loan you give me, sir. Okay, then you are asking whether you want collateral, whether you will give me collateral for the entire 20 lakhs. No, sir, I cannot give entire 20 lakhs collateral. I will give, that is for 8 lakhs collateral, remaining 12 lakhs, I cannot give collateral. So in that case, you have to see what is the percentage of collateral is giving. For the collateral is giving, if it is less than 50% of the exposure, then also it has to go to next higher authority. The 20 lakhs branches cannot sanction. Similarly, if it is more than 50%, it can go to it will be sanctioned by the respective sanctioning authority, irrespective of the percentage of collateral more than 500 lakh, respective sanctioning authority. The entire crux of this slide is loan amount. If it is entire 100% to be covered under CGTMSE, then next higher authority to sanction the loan. And if the security given is less than 50% of the exposure, then also that has to be sanctioned by the next higher authority. Then that is beyond that, respective sanctioning authorities can sanction. Okay, then internally rated low, normal, and moderate accounts only to be covered under CGTMSE. Now you see, so fresh coverage percentage, what is the maximum coverage a loan can be covered under CGTMSE? So this is a change in the circular. If it is a loan for a micro enterprise, for the loan amount up to 5 lakhs, 85% of the amount in default will be given. What do you mean by 85% of the amount in default? The book liability, NPA liability. So if the loan amount is up to 5 lakhs, if the liability, NPA liability, 85% will be covered under CGTMSE. If the loan amount is above 5 lakhs up to 50 lakhs, if it is a micro enterprise, 75% only will be covered. If the loan is above 50 lakhs, less than or equal to, because maximum that can be covered under CGTMSE is only 500, then 75% will be covered like that. MSE is located in northeastern regions, including Sikkim, UT of Jammu and Kashmir and Ladakh, 80%, 80%, 75%. This table you have to by heart, sir. I cannot help. Women enterprises, SC, ST, physically challenged entrepreneurs, Z certified MSCs, and MSCs in aspiration districts. See, this is the cover. So the minimum cover MSME, MSC loan is 75% is the minimum. No, sometimes they ask, what is the minimum and maximum coverage as on date for the MSC loans up to 500 lakhs? So minimum is 75 and maximum is somewhere, you see, maximum is 85. So then you should know where it is 75, where it is 80, where it is 85. So this is the coverage for MSC loans depending upon whether it is micro or where it is situated, etc. And depending upon the loan amount also, the coverage will vary. This is a change in the current year. Questions may come. Then I was telling you the annual guarantee fee from 1/4/2023. When the loan is covered under CGTMSE, borrower has to pay the guarantee fee. So last year, so there is no, from this year onwards, the guarantee fee is made depending upon the loan amount. Till last year, this facility was not there for the borrower. If the loan amount is up to 10 lakhs, there is a rate called standard rate. So the rate is you have to cover the premium the borrower has to pay 0.37%. So then we have a rate with risk premium. I will explain to you, don't worry. If the loan amount is about 10 lakhs up to 50 lakhs, the standard rate is 0.55%. So like that, loan amount up to 500 lakhs can be covered under CGTMSE. The insurance premium is 1.35% of the loan amount or the liability, whatever it is, as per the guideline. Now the question is, this is the normal rates are given by CGTMSE. What CGTMSE will do, every year CGTMSE will do a survey of the guarantee covered accounts in every bank. They will find out in the guarantee covered accounts what is the quick mortality percentage and what is the NPA percentage, and then what is the claim payout ratio. So what is the guarantee premium they have paid? How much every year I am giving the claim to the bank? So that is every year bank will make the CGTMSE through an independent assessor will find out what is the coverage that is guarantee covered accounts NPA percentage in Canara Bank. What is the claim payout ratio to Canara Bank from CGTMSE? What is the quick mortality, accounts becoming quick mortality, which are covered under CGTMSE? They will make a survey and they will fix. If everything is pakka, no NPA, very clean, claim payout ratio is very less, accounts are not becoming quick mortality, then they will ask you to pay only the standard rate. If based on that, if more NPA, more quick mortality, claim payout ratio more, etc., then on the standard rate, banks have to pay either 15% premium. So if we calculate 0.37 into 15%, and additionally when you add, you get the premium of 0.43. Like that, if it is 30%, CGTMSE will tell whether Canara Bank, there is no risk premium, then this is the rate. Whether Canara Bank 15% is a risk premium, this is the rate. Like that, up to 70%, CGTMSE can charge the risk premium. The risk premium depends upon these factors. CGTMSE will decide what is the risk premium for a bank each year. For example, if the risk premium is given to Canara Bank as 70%, and if the loan quantum is above 200 lakhs up to 500 lakhs, it is only 1.35 is the standard rate, but the party has to pay now 2.30%. Okay, sir. Similarly, now beside this is a risk premium added to the standard rate. CGTMSE will give a discount also from the standard rate. For whom CGTMSE gives the discount, and what is the maximum discount a borrower can get from the standard rate? You see, risk premium, okay, already told you. 10% discount is available for women enterprise. 10% discount is available for women enterprise for SC/ST beneficiaries, physically challenged units in northeastern region, Jammu and Kashmir, Ladakh, is red status, MSEs, etc. So if it is a woman, she will get 10% discount from the standard rate. Suppose if the woman is an SC/ST beneficiary, she will get another 10%. So maximum, a person can get maximum 30% discount on the standard rate. So these people will get the discount. So maximum a person or a unit will get 30% discount on a standard rate. If they ask that question, you should not miss it. Now, okay, sir, good. Now let's see the questions. You'll be able to answer now all the questions. 2-3 questions I have made there. You'll be able to answer all the questions. Question number 19. Very important question. You go through it, you'll be able to answer now. Question number 19. Which is not relevant with regard to CGTMSE as per HO Circular 433/23. Again, I am telling which is not relevant means which is a wrong answer, which is not in the circular. This question is called as a negative question. Which is not, so they may ask which is the odd man out, which is not relevant. So which option is not correct? Like that, they will ask the question. So that means the point which is not in the circular, you have to take. Okay. Which is not relevant with regard to CGTMSE as per HO Circular 433/23. 1. Ceiling of coverage for MSME loans increased from rupees 200 lakhs to 500 lakhs. Point number 2. Maximum extent of guarantee coverage for credit facilities above 50 lakhs up to 500 lakhs for women entrepreneur is 85%. Okay. The modified standard rate of premium for credit facilities above 50 lakhs up to 1 crore is 0.60. In case of claims lodged on or after April 1st, 2023, initiation of legal proceedings as a precondition for invoking guarantee shall be waived for credit facilities having aggregate outstanding up to 10 lakhs. Okay, by the delegated authority. RO and CAC is the delegated authority in our bank to take decision on waiver of legal action. Okay, sir. Now, which is not relevant? Your option A, none are not correct. That means all are correct. So you should know English also. So option A, none are not correct. That means all are correct. Option B, 1 and 4 are not correct. So which is not correct? No question. Option is B is 1 and 4 are not correct. Option C, 2 is not correct. What is 2? 2 is already here. Okay. D, all are not correct. All are not correct. So which is not correct? Let us see one by one. See, ceiling of coverage for MSME loans increased from 200 lakhs to 500 lakhs. Sir, this 200 lakhs to 500 lakhs is correct, sir. But it is not MSME loans. You know, CGTMSE means Credit Guarantee Coverage Fund Trust for micro small units only. Small enterprises. That is micro, small, medium enterprise is not covered under CGTMSE. So point number 1 is not correct. Point number 2, maximum extent of guarantee coverage for credit facilities above 50 lakhs up to 500 lakhs for women entrepreneur is 85%. Let us see whether that is 85%. Let us see. So maximum guarantee coverage for women entrepreneurs 85%. Correct, sir. Correct. Okay, point number B2 is also correct. Point number 3. The modified standard rate of premium for credit facilities above 50 lakhs up to 1 crore is 60%. Let us see whether that is correct. Above 50 lakhs, 0.60%. Yes, that is also correct. Point number 1 is not correct. Point number 2 is correct. Point number 3 is correct. Whether point number 4 is correct, let us see. So 1, 2, 3. Point number, sorry, D. I am put it mistake. It should be point number 4. In case of claims lodged on or after 1/4/23, initiation of legal procedure. Yes, that is also correct. You know, that is from 5 lakhs to 10 lakhs. It is increased. RO and CAC is the delegated authority in our bank to take decision on waiver of legal action. So 4 is also not correct. In our bank, it is not RO head CAC. This is AGM ROCAC. So AGM ROCAC is the authority to take a decision whether legal action can be waived for an account or not. So point number 1 is not correct because I have mentioned that MSME loan. 200 lakhs, 500 lakhs is correct, but it is not MSME loan, it is MSC loan only. And point number 4, this is point number 5 or something, I have made a mistake there. So RO at CAC is not the delegated authority to give permission for waiver of legal action. It is AGM ROCAC. So 1, as per this one, 1 and 4 are not correct. So which is not correct? 1 and 4 are not correct. So your option should be B. Question number 19, your option should be B. 1 and 4 are not correct. So all other things are correct. The next question. If the credit exposure to a party under MSC non-schematic is more than 10 lakhs up to 25 lakhs, and if the entire exposure is covered under CGTMSE, no collateral, the proposal to be sanctioned by respective sanctioning authority, no, next tier authority. So question number 20, answer is B. I already told you. So if the 100% coverage by CGTMSE, next tier authority. If the coverage, if the seal, that is collateral value is less than 50% of the exposure, then also next tier authority only. Okay. Now, so up to question number 20, we have seen certain things that changes. Similarly, friends, in this year, in that is your credit policy or whatever it is, delegation of power, many changes have come in the staff loan sanctions. In the staff loan sanctions, many changes have come. I think you would have read, somebody would have told you. So again, I will make it available to you. Loans and advances to employees, you know, the RO has been, HRMs have been delinked and powers are given to the ROs, etc., etc. Accordingly, the loan sanction powers also underwent a change. So the circulars are 458, 544, and 575/23. These are all the major changes in the employees' loan, who is the sanctioning authority, etc., etc. Festival advance. Who has to sanction the festival advance? So you are going to become higher officers, has to become managers, etc., etc. You should not have any doubt on this. People will come to you and ask whether you will sanction. You have to tell, I am the sanctioning authority or not. Who has to sanction the festival advance to the employees of the bank? Branch in charge, if the branch is headed by scale 1, scale 2, and scale 3. So they will sanction the festival advance. Branches, officers headed by executives. For example, if a scale 4 is heading a branch, or in the regional office, DGM or AGM is heading the regional office. For the staff working there, who has to sanction the festival advance? Managers, senior managers, who is looking after the staff matters, will sanction the festival advance to them. Then employees in the circle office or the head office, employees in the circle office, HRM section will sanction. Employees in the head office, OSR section will sanction. Festival advance sanctioning authorities, 3 categories to the employees. Branch headed up to scale 3, branch in charge. Branch headed by executives and officers headed by executives, then the manager or the senior manager in charge of staff matters. For staff, the fiscal advance to employees in CO and HO, HRM section, WASA section. Then two-wheeler loan. Who has to sanction a two-wheeler loan to the employee of the bank? Branch in charge, in which the salary is credited, of the employee is credited. Okay, branch in charge, in which the salary of the employee is credited. Four-wheeler, clean OD, DPN, who has to sanction? RO head. So individual authority, it is not CAC. Keep that in mind. So loans to four-wheeler loan, car loan, or clean OD or DPN, RO head to sanction, not RO head CAC. Then the employees housing loan and additional housing loan to employees. This also RO head under whose jurisdiction the property is situated. For example, let's assume I am working in a branch in Chennai. I am going to purchase a property in Madurai. Okay, so Madurai, let us assume that property coming under Madurai. So that property, let us assume that jurisdiction comes under RO Madurai. Then even though you are working in Chennai, the RO head of Madurai RO will sanction the housing loan. So employees housing loan, additional housing loan of the employee, RO head under whose jurisdiction the employee is working, no, under whose jurisdiction the property is situated. Please be clear. Housing loans to employees as applicable to customers. So if the employee's housing loan is not sufficient, he can also avail loan from as applicable to the customer. Or if the employee is not eligible for an employee's housing loan, if he is eligible in a housing loan like customer, if his eligibility 25%, etc., etc., then also that housing loan can be sanctioned. That also to be sanctioned by the RO head under whose jurisdiction the property is situated. So very clear, two more slides. Housing loan, two more slides with regard to loans and advances of the employees. Already we are in question number 21, 34 questions we have to finish. It is around 4 o'clock. I will try to finish before 5. Don't worry. Housing loan for retired employees of the bank at concessional interest. Say, I am a retired employee of the bank. Can you give me an employee's housing loan, concessional interest? So what is the employee's housing loan? You got the employee's housing loan. What is a 6% simple? No. Similarly, for me also, employees housing loan scheme, you can give to the retired employee of the bank. The rate of interest is 6.5 simple. As on date, the rate of interest is 6.5 simple. But what are all the conditions? So in my service, the retired employee should not have availed an employee's housing loan in service. And second point is, today, when I want an employee's housing loan at concessional rate for the retired employee, as on the date of availing the loan, he should not have an house in his own name. If these two conditions are satisfied, you can sanction an ex-employee housing loan under employee's housing loan scheme at the rate of 6.5% simple. Okay, who has to sanction the loan? So DGM of the circle in which the property is situated. Then agricultural loan. Employees are eligible for agricultural loan also. Branch in charges as per delegation of power. Agricultural loan, branch in charges are having delegation. As per that, they can sanction. Loans overdraft against term deposit of our bank and approved securities, not approved powers, approved securities, respective delegated authorities as per delegation of power. Loans against deposits or approved securities. Canara Kavach. So Canara Kavach we are also explaining now. So Canara Kavach, like employees housing loan, to be like what you say, that is four-wheeler loan, clean OD, DPN, like that, the RO head has to sanction. Then Canara mortgage. So employees are eligible for Canara mortgage also. So this loan to be sanctioned by the normal delegated authority. For example, when an employee wants a Canara mortgage, so the RAH, if the RAH is having the power, he will sanction the Canara mortgage to the employee like customer. So he will give the loan to the similarly four-wheeler, two-wheeler loans as applicable to customers. This was introduced this year. Now employees are eligible what type of retail loans in Canara Bank. Employees are eligible for 3 types of retail loans other than the employees loan scheme. Leave it. But which are they? They are eligible for Canara mortgage as applicable to the customers. Second thing is they are eligible for housing loan as applicable to customers. So this year they are also eligible for a four-wheeler or two-wheeler loans as applicable to customers under retail lending scheme. So housing loan as applicable to customers under retail lending scheme, Canara mortgage as applicable to customers under retail lending scheme, or two-wheeler, four-wheeler loans as applicable to customers under retail lending scheme, employees can also avail if they are not eligible under their employee scheme. or if they want more loan, they can combine both. Okay, this is the additional thing has come. If they ask you, which are all the loans employees are eligible under the retail lending schemes of the bank. So this loan to be sanctioned by the RO head only. It is not RO head, CAC. Okay, sir. Next point, anything is there. Then continuation of liability under various employees loan schemes. So employees retiring, he wants the loans to be continued based on the pension percentage he's getting, then DGM of the circle to sanction. Then continuation of housing loan liability by the legal heirs why employee dies in service. Employee died when he is in service. The legal heirs wants to continue the housing loan as applicable to the employee, 6% simple rate of interest, DGM of the circle. Substitution of property with or without additional entitlement, DGM of the circle. Release of title deeds of employees housing loan. Friends, I told you in question number 7 or 8, I told you. So whenever a document to be released, branches themselves can release the document with no need of permission from the sanctioning authority. But coming to release of title deeds of employees housing loan, branches cannot release the title deeds. Respective sanctioning authority only has to release the title deeds. Who is the sanctioning authority today? It is presently RO head, not RO head CAC, RO head. Then house property acquired under employees housing loan as security to educational loan of children. That can be, that is sanction, that is that property to be released by the GM of the circle. That is, this is all the thing. Then, and let's quickly go through the question so that 2-3 points what we have seen, you'll be able to answer the question. That is question number 21. Who is the sanctioning authority for clean OD DPN for employees of our bank? Today, it is RO head. So question number 21, answer is C. Question number 21, answer is C. Okay. So now quickly we can, if you read the subject we are at, answers you can quickly go through. So question number 21, answer is C, RO head. Then, as per HO Circular 458/23, life tax, insurance, registration charges, and other accessories up to rupees dash for four-wheelers to be reckoned to arrive at the quantum of loans for employees of our bank. Friends, see, till 458/23 is issued, whatever may be the accessories value, whether in two-wheelers or four-wheelers, bank is taking and giving loan. But you know that is under the retail lending scheme of the bank, accessories for four-wheeler maximum 25,000 only is permitted, and that portion only bank will give the loan. For accessories for two-wheeler maximum only 5,000, on that only bank will give the loan. The same condition now applied for the employees vehicle loan, employees loan under two-wheeler or four-wheeler also in the HO Circular 458/23. As per HO Circular 458/23, life tax, insurance, etc., up to 25,000 rupees for four-wheelers to employees to be arrived at the quantum. So 25,000. So no, till last year, no restrictions. Now 25,000 rupees. So our answer should be D. For question number 22, answer is D. If it is two-wheeler, it is only 5,000. Like customer, employees loan for four-wheeler and two-wheeler also, accessories, insurance, etc. Maximum 25,000 for four-wheeler, maximum 5,000 for two-wheeler. So for question number 22, answer is D, because 25,000 option is not there. Question number 23. Which retail lending loans as applicable to general customers can be sanctioned to staff members also? Canara Mortgage, yes. Canara Vehicle for four-wheeler, yes. Canara Vehicle for two. Who is the sanctioning authority for Canara Mortgage to staff member? Respective sanctioning authorities who are sanctioning to customers. Who is the sanctioning authority for Canara Vehicle four-wheeler and a retail lending scheme to the employee? RO head. Who is the sanctioning authority? Canara Vehicle two-wheeler retail lending as applicable to customer? RO head. Canara Budget, no. Canara Budget cannot be sanctioned to the employees as applicable to retail lending. Housing loan under RBI scheme. So housing loan under RBI scheme, like what do you say, other customers. So it can be sanctioned. Who can sanction? RO head, under whose jurisdiction the property comes. So 1 to 5 all, 1 and 2 5 only, except 4 all, except 4 and 1 all. Which retail lending applicable to general customers can be sanctioned to staff members also? 1, 2, then 1, 2, 3 is permitted, 4 is not permitted, 5 is permitted. So except 4, all are permitted. Question number 23, answer is C. So now you know which all the loans applicable under retail lending staff is eligible. Now you know who is the sanctioning authority for these loans also. Okay. The minimum and maximum car loan, solar and battery driven to employees in the bank is minimum is 12 lakhs to substaff and 23 lakhs from scale that is 6 to scale 8. That is correct. Answer is already there. I need not tell. See, quantum of car loans to employees increased in HO Circular 458/23. So petrol, diesel, CCL, LPG driven cars, solar battery driven hybrid cars. Substaff here minimum 10 and maximum up to scale 8, 21. And if it is this category, substaff minimum 12, maximum it is 23. You see, life tax, insurance, registration charges and other accessories up to 5,000 for two-wheelers and up to 25,000 for four-wheelers to be reckoned to arrive at the loan quantum. Earlier, this is applicable only for customers. For staff members, unlimited. Now that is also a restriction has come. Quantum of loan increased to this level. So this table you should know. Okay. So for this question, very simple. Already answer is there. Already answer is there. So substaff to 12 lakhs and then scales 6 to 7 battery driven etc. 23 lakhs. So answer is already there. Then you see. Now, another 2 slides we will see with regard to housing loan to employees, sanctioning authority and all we have seen. Now, one more change also has come. Let's quickly go through the presentation and we will understand. Housing loan. Okay, leave it. See, Employees Housing Loan Scheme 462/23. Employees housing loan will be sanctioned to acquire a house property and the property can be in the name of the employee. Okay, that is already there. Employee spouse name. Earlier, in spouse name alone, it is not permitted. So imagine, so the loan has to be given in the name of the employee's housing loan, but in whose name the property? The property is in the spouse name. Earlier, the property should be the joint name of the employee and the spouse. But in HO Circular 462/23, it can be the property can be the name of the spouse alone. Still, you can give employee's housing loan to the employee at concession rate of interest 6%. So the employee housing loan can be jointly, the property can be jointly with the employee, jointly with the spouse, or jointly with the minor or major children. All these cases, subject to spouse and major children, they should join in creating the mortgage and loan document. So this year, the change in the employee's housing loan is the property can be registered in the name of the spouse. Still, loan can be given in the name of the employee. Or the property can be registered in the name of the employee and disposed jointly, or the property can be registered in the name of the employee and major children or minor children jointly. In all the cases, so employee and the spouse and the major children to join the documentation and the registration. Okay, so the change is in the name of the spouse only the property can be registered, still loan can be given. Similarly, employees housing loan will be sanctioned to construct a house on the leasehold property also. And the property can be in the name of employee or in the name of the spouse of the employee only. This is the change this year. So the property can be in the name of the spouse and the leasehold property also in the name of the spouse only without the employee joining the name. Okay, the property, but loan can be given, all other things. So, and one more point here is the unexpired leasehold right minimum period should not be less than 90 years. That point also you keep in mind. Now, 2 more points. Employees housing loan can be availed for any number of occasions within the entitlement. The employee can acquire any number of house flat within his entitlement. Say, I go and avail, I am employee, I'm availing an employee's housing loan. Okay, then I dispose of it. So now there is no property in my name. I again go and if I am eligible within my entitlement already, what is my maximum? Let us assume I am maximum eligible 75 lakhs. First house I have taken for 20 lakhs. So then second house also I am going and taking for another 30 lakhs. Okay, 20 plus 30, 50 lakhs. My eligibility is still 75. Suppose if I want to go and acquire a third house, what I am telling, my eligibility is 75. First house I acquired at 20 lakhs under employees housing loan. Second house I availed at 30 lakhs under employees housing loan. Still I am eligible for 25 lakhs. Now, if I go to the bank and ask for employees housing loan, since on the date of applying employees housing loan, since I have two properties in my name, bank will not give me the third housing loan. What I should do? I should have disposed of one of the property. Like that, so you can buy and dispose. Maximum at any point of time, you should have only not more than two properties. In that case, any number of times you can avail housing loan, dispose the property within your entitlement. That is a guideline. Employees housing loan can be availed for any number of occasions within the entitlement. The employee can acquire any number of house flat within his entitlement. At any point of time, employee should not own more than two houses, either in his name or jointly with the spouse, including the one for which employee's housing loan is availed now. RO head is delegated powers, okay, that you leave. Okay, sir. So this is the condition, sir. Now employees housing loan can be sanctioned for any number of times for any number of houses within the entitlement, provided at the time of availing for an employee's housing loan, you should not have more than two houses, including the one for which the loan is applied. Okay, so now let us see. Question number 25, which is not a revised guideline with regard to employees housing loan as per HO Circular 462/23. Employees housing loan will be sanctioned to employees to acquire own house property either in his name or in the name of the spouse or jointly, etc., etc., subject to the condition that major children creating. Yes, that is correct. No employee, point number 2, point number A is correct. Point number B, no employees housing loan is permitted for construction of a house on leasehold property, either in the name of the employee or in the name of, that is wrong. So housing loan will be permitted for construction of a house in the leasehold of property, either in the employee's name or in the spouse name only or jointly. So point number, which is not a revised guideline. For question number 25, answer is B. All other things are revised guideline B form. Question number 26. Canara Kavach is a new loan to employees of the bank to provide financial protection coverage for the loans availed by the employees under various employees loan scheme as per HO Circular 468/23. Let us see what is the Canara Kavach, so you will understand it. Okay, this is the scheme, new scheme. See, what is the Canara Kavach? It is, for example, under the employees housing loan scheme, we availed many loans. So not an employees housing loan. Under the employees loan scheme, let us assume an employee has availed a Canara budget. Yes, availed a clean, so not Canara budget is not eligible. Yes, availed a clean OD or DPN or a vehicle loan or a housing loan, anything yes, availed. Now, the insurance companies are prepared to cover the liability in the employees loan scheme. They are prepared to cover. But however, so you have to pay a premium to the insurance company. To pay the premium, bank is giving you a loan. That is the Canara Kavach. There are insurance companies which is telling, if something happens to the employee, various reasons, we will repay the loan to the bank. For that, so let the employee pay a premium to the insurance company, depending upon the total liability. For that, bank is telling, so for the premium, I am giving a loan to you. That loan is called the Canara Kavach. So coverage for liability under various loans to employees, under employees housing loan, vehicle loan, DPN and clean loan. Any new loan schemes introduced for employees are also to be covered under Canara Kavach. What is the maximum loan quantum? Workman 3.50 lakhs, scale 1 4.5, scale 2 5, scale 3 5.25, scale 4 6 lakhs, scale 7 7 lakhs, scale scale 6 is 8.50. Like that it goes. Maximum loan is 9 lakhs or the premium whichever is less, because let's assume an employee is having total liability under the employee's loan scheme 50 lakhs. For that 50 lakhs, what is the maximum premium insurance company will ask? It will ask only some few percentage, isn't it? They will not ask the entire loan amount as the premium. They may ask certain percentage of the loan amount as the premium. So here for the premium only, bank is giving the loan. What is the maximum loan will be given? Minimum is 3.5 and maximum it is 9 lakhs or the premium amount, whichever is less. Again, keep in mind, Canara Kavach is sanctioned. So to pay the premium to the insurance companies, which are covering the liabilities in the employee's loan scheme availed by the employee in case of certain untoward incidents happens to the employee. So you need not recover the money from the terminal benefits of the employee. Or if there is no sufficient terminal benefits, the account will go to NPA, etc., etc. You have to write off. The family will not get anything. So you can avoid all those things. So the employee is covering under insurance. For the insurance premium, the minimum amount 3.5 or the maximum is 9 lakhs, depending upon the cadre or the insurance premium, whichever is less, the bank gives the loan. Under Canara Kavach, the loan will be given. And then another point is the amount will be directly given to the insurance company. Okay, and when we covered insurance company, what is the interest for that? Interest is 7% per annum, compounded monthly. So repayment is 10 years in 120 installments as applicable. Who is the sanctioning authority? Like your that is decree OD DPN. So Canara Kavach has to be sanctioned presently or overhead. Or get individual authority, loan amount directly to the insurance company, liability to be cleared. So suppose out of the terminal benefits, and it can be continued after the retirement also. So under the scheme. Now let us see. Now let us see the question. So question number we are seeing 26. Canara Kavach is a new loan to employees of the bank to provide financial protection coverage for the loans availed by the employees under the various employees loan scheme as per HO Circular 468/23, which is not a scheme guideline. Maximum loans is 3.50 lakhs for workmen and 9 lakhs for scale A, or the insurance amount, whichever is that. Okay. Interest is 7% compounded annually. That is wrong. Interest is 7% compounded monthly. Repayment 10 years with 120 EMIs. Employees can avail the insurance from any insurance companies to their choice. Loan amount will be credited directly. So here the answer is 7% compounded monthly. That is not correct. So here you have put annually. So which is not correct? Point number B is not correct. 27. As per HO Circular 479/23, at the time of review, monthly sanction reviews. So branches has to submit to RO, and RO has to submit to circle office has to submit to HO their sanction. Everything is discussed in HO Circular 374/2023. So their credit audit, stock audit, or legal audit, and CRMF, everything is covered under the Credit Review and Monitoring Policy 374/23. So now, as an addendum to that circular 479/23, so at the time of review of the loans sanctioned by the various authorities, the review authorities also have to check certain parameters, whether branches have done properly updated those parameters in the CBS cost part. So loan is sanctioned by the branch. So disbursed by the branch in CBS, parameters are created for loan quantum or sanctioning authority, repayment period, fast path you are created. So after sanctioning, disbursing the loan, you are sending it for review to the review authority. Who is the review authority? At the RO, people are there. When you have to send for the sanctions for review within 7 days of the end of the month in which sanction has taken place. For example, all loans sanctioned in the month of October will be sent to the reviewing authority on or before 7th November. Okay, what are the things you will send, whether you will send the entire detail. If the loan amount is up to 5 lakhs and up to 6 lakhs for SHG, so you will send only the consolidated sanction. If it is above the amount which is mentioned there, you will send the individual sanction review copy, then CIBIL report you have generated, everything, the risk rating you have done, everything you have to send it for review. So within 7th of the succeeding month. So review authority will give you the review observation within 30 days of you sending it. So any observation is there, you have to complete the observation within another 30 days. Okay, then which are all the loans not subject for review, which are the loans subject for review, etc., etc. Everything is in your policy. So we are not going there. Somebody else may be covering the topic to you. Now, so at the time of review, the reviewing authority to check for correctness of various parameters fit in the CBS. Okay, which is the fast path which does not match with regard to term loan. Sir, this you should, by heart only you should know, sir. This is in 478, you see. That is checking CBS parameters versus sanction and disbursement in the CBS by the review authority. So rate of interest. If the loan is a term loan, rate of interest to be updated in LNM 10. If it is a ODOCC, branches should update the rate of interest in fast path CHM 07. Like that, the tenor, the period of the loan, LNM 10 and CHM 07. Margin, LNM 34, CHM 06. Moratorium period. For ODOCC, there is no moratorium period. For term loan, it is LN 522. Sanctioned limit, LNM 10, CHM 07. Primary and collateral security, LNM 34, BAM 74, CHM 06, BAM 74. Customer account relationship maintenance, CI 142, CI 142. Internal rating. So they may ask, internal rating under which fast path for term loan or both ODOCC the same, BA 188. So external rating, when external rating to be done, what is the penalty? Everything we discussed in detail. So external rating, BA 189, BA 189. Udan registered number CM22, legal entity identifier. You know what is legal entity identifier? What is the cutoff time for which the legal identifier time is given by the bank? Loans for other than for individuals above 5 crores. Okay, loans given, legal entity identifier. It is a 20-digit character, alphanumeric. So by putting that number, you can find out globally what is the liability for the borrower. For CBIL, CAR, etc. Within India, the loans availed. With this LEI, legal entity identifier, you can avail globally, find out globally what are all the limits, liabilities of the borrower. And not only that, the LEI is not one-time measure. So every year, the LEI has to be got renewed with the authority. So LEI, when you are updating, what is the original date of in SIM 17? In SIM 22, you have to update what is the renewal date of the LEI. So 15G, 15H to be taken every financial year. Similarly, LEI has to be updated. It is valid only for 1 year. It has to be renewed every year and new LEI, new next sanction date to be updated. So CM7 and CM22, then passport details of the borrower, SIM61, SIM61, sanctioning authority, BA020, CHM07. These 10 parameters, you have to be thorough. If questions comes, you should not miss it. You see the question. As per HO Circular 479/23, at that time of review, the sanctioning reviewing authority to check for correctness of various parameters fed in the CBS, which is the fast path which does not match with regard to term loan. See, if I am correct, point number D, with regard to term loan, which fast path? Sanctioning authority of the term loan. Let us see. Sorry. The sanctioning authority of the term loan is this is term loan, this is ODOCC. The sanctioning authority for term loan is BA020, you have to update. Here what I have given, that is sanctioning authority, this is with regard to term loan, no? Check for correctness review, which is the fast path which does not match with regard to term loan. Rate of interest LNM 10 is correct. Internal rating BA 188 is correct. Passport details SIM 61 is correct. Sanctioning authority is not CHM 07. Sanctioning authority for term loan to be updated in BA 020. Okay, sir. Point number D is not correct. So questions you may look like very silly, but examiner will ask any question. So I don't want to take any chance. So I want to cover all the points in that circular. So 6 more questions are with that we'll wind up today. I don't want to spend more time with you because morning you are already loaded with your mind with regard to various credit matters by Mr. Reddy. Delegation of powers to sanction loans and advances under SHG, including DE NRLM, revised for branches headed by Scale 2 and Scale 3 in HO Circular 542/23. I will tell the answer. You please note it down. So for Scale 2 headed branches, so for SHG loans, either SHG loans or SHG loans including DE NRLM. So last in the very earlier delegation, it was 10 lakhs. For Scale 2, now it is increased from 10 lakhs to 15 lakhs. Okay, please note down. For Scale 2, the revised delegation power is 15 lakhs. For Scale 3, the revised delegation power is 15 lakhs to 20 lakhs. So for Scale 2, 10 lakhs to 15 lakhs. And for Scale 3, 15 lakhs to 20 lakhs. And Scale 1 headed branches, it is always the same, no change has come. It is 6 lakhs. Now, SHG, delegation of sanctioning power, including day NRLM, for scale 1 headed branches 6 lakhs, scale 2 headed branches 15 lakhs, scale 3 headed branches, it is 20 lakhs. Okay, sir. Now, let us not spend time on that. Now, question number 29, which is not correct as per HO Circular 544 by 2023 regarding the sanctioning authority for employees loan scheme. Okay, so I want to answer from you. LHV two-wheelers, RO head, continuation of employees housing loan liability to legal heads of the deceased employee on the same terms and conditions if the employee dies while in service, DGM of the circle, a release of title deeds in respect of housing loans to employees, RO head, housing loan to retired employees of the bank under employees housing loan DGM of the circle, which is not correct. See, point number A is not correct. B, C, D and all correct. Point number A, C. LHV two-wheeler, RO head, no. So, four-wheeler, RO head. LHV two-wheeler, who has to sanction to the employee? The branch in charge in which the salary of the employee is credited. So, question number 29, which is not correct, answer is A. When you know which is not correct, you should know the correct answer. The correct answer is the loan to be sanctioned by the branch in charge where employee's salary is credited. Question number 30. Which one of the following is not a guideline with regard to prepayment penalty for pre-closure takeover of term loans as per HO Circular 550/2023? So takeover. For transfer of loans to other banks, financial institutions, prepayment penalty 2% on the amount prepaid and applicable both for fixed and floating rate of interest. For the pre-closure of loans by borrowers not involving transfer of liability to other bank. Borrower himself pays out of his pocket. He is not going to take over by some other bank. So it not involving transfer of liability, no penalty need be levied. Prepayment penalty is waived for all MSME term loans, both floating and fixed interest rates. Then, prepayment penalty for all floating rate term loans sanctioned for the purpose other than business to individual borrowers. No prepayment penalty. None of this. Friends, whenever a loan is taken over from Canara Bank to some other bank, so the borrower has to pay a prepayment penalty. When the prepayment penalty comes, only when it is taken over by some other bank. If the borrower pays out of his own sources and closes the liability, no concept of prepayment penalty. Let us see the PowerPoint. It is all there in the delegation of power, credit policy, etc. Specifically in the circular 550/23, they have brought the gate. They again reiterated the guideline. Let us quickly see. Okay. See 550/23 for pre-closure of the term loan. For the pre-closure of the term loan, prepayment penalty 2% on the prepaid amount. Okay, takeover. Applicable for loans availed both under floating and fixed rate. Correct. Waiver in respect of all MSC borrowers. You are having an MSC loan that is taken over by some other bank. In that case, you need not charge 2% prepayment penalty. So, which is the exception. Similarly, not to be charged in the case of all floating rate term loans sanctioned for the purpose other than business to individual borrowers with or without co-obligation. Please understand the prepayment penalty of 2% is applicable both for fixed rate and floating rate for accounts taken over by some other bank from Canara Bank. What is the pre-penalty? 2% on the prepaid amount. However, if the MSME loan is taken, MSC, not MSME, MSC loan is taken over by some other bank, so there is no pre-penalty charges. Similarly, if the loan is all floating rate term loan sanctioned to individuals other than for business purpose, if it is taken by some other banks also, in that case also, no prepayment penalty to be levied. Now let's see the question. So specifically it has come in 550/23. So that is why I have put the question here. See, which one of the following is not a guideline with regard to prepayment penalty for pre-closure takeover of term loans as per HO Circular 550/23? For transfer of loans to other banks, financial institutions, prepayment penalty 2% on the amount prepaid and applicable both for fixed and floating rate. Correct. For pre-closure of loans by borrowers not involving transfer of liability, no prepayment penalty. That is also correct. Point number C. Prepayment penalty is waived for MSME term loan. This is wrong. It is waived only for MSC term loans. Okay, C is wrong. Point number D, no prepayment penalty for all floating rate term loans sanctioned for the purpose other than business to individual borrowers. Correct. So, which is not a guideline. In this question, for question number 30, C is not the guideline. The correct answer is MSC loan. Okay, 20, 30 we have seen. Now 31, 32, 33, 34. So as per the promise, I will finish. Don't worry. 31. Okay, sir. 31, no? Yes, yes. Which one of the following is not a guideline in respect of DRI advances as per HO circular? Generally, so DRI advances we have forgotten. Now, HO has introduced the circular 605/2023. Generally, the examiner will ask about a question on the DRI loans. More or less, it is coming. Not only for your exam, many banks exam also. Since 605 is introduced, I am thinking definitely one question will be asked this time. Now, what is the guideline? Let us see. Annual income to what is the DRI rate of interest? People in the economically backward. So based on the annual income, so of the borrower, you can decide whether you can give a loan under DRI loan scheme. So the rate of interest 4% simple. Even educational loan also can be sanctioned as per the education loan policy of the bank. The rate of interest is 4%. That is a decision taken by Canara Bank. Okay, normally what is the guideline with regard to DRI loan scheme? We are going to see one thing you have to keep. For example, a person who is eligible for a DRI loan, if he has got an admission in a college and if he is coming under the IBA model education loan scheme, etc., you can sanction education loan to him by fulfilling all the conditions, but the rate of interest is 4% simple. Keep that in mind. Okay, sir. Now, which one of the following is not a guideline? Again, see, not a guideline. With respect to DRI advances, as I suppose circular 605/23. Annual income not to exceed 18,000 rural areas and rupees 24,000 in urban and semi-urban areas. Correct. 2/3 of the DRI advances to be given in rural and semi-urban areas and the balance 1/3 in urban and metro areas. Correct. 40% of the DRI advances to be given to SC/ST borrowers. Correct. Total DRI advances not to exceed 1% of the net credit of the bank. This point number D was there some time before. But now there is no such target. The targets are the annual income should not exceed 18,000 and 24,000. Then 2/3 of the DRI advances to be through rural and semi-urban area and 1/3 through urban and metro area. That is correct. 40% of the DRI advances of the bank should be given to SC/ST beneficiary. That is also correct. So these targets you should know. They may ask you. Then total DRI advances not to exceed 1% of the net credit is wrong. So which is not correct? For question number 31, answer is D. For question number 31, answer is D. Question number 32. Which is not relevant with regard to DRI advances as per HO circular 605/23. Maximum loan permitted by beneficiary is 15,000. Correct. So as per the scheme, you forget about your education loan. That is a special decision taken by Canara Bank. So maximum loan permitted per beneficiary is 15,000. For housing loan, the maximum loan is rupees 20,000. Land holding not to exceed 1 acre of irrigated and 2.5 acres of unirrigated land. SC/ST beneficiaries, no such criteria. Interest rate is 4% simple. Now, as per that, I'll tell you, as per the DRI scheme, the maximum eligible loan amount is only 15 lakhs, 15. Whatever, whether you are constructing house or whether you are purchasing something, the maximum loan under DRI scheme is only 15,000. However, if the loan is given under the DRI scheme for construction of house for a SC/ST beneficiary, the loan is maximum 20,000. Only for SC/ST beneficiary, the maximum loan DRI loan can be 20,000. For all other beneficiaries, it cannot be 20,000. It is only 15,000. So the land holding not to exceed 1 acre of irrigated and 2.5 acres of unirrigated land. Exemption is SC/ST beneficiaries. So interest rate is 4% simple. Here you see point number B, you see for housing loan, the maximum loan is 20,000, which is not relevant. So either point number A is relevant, maximum 15,000. Point number C is correct. Point number D is also correct. Point number B is not correct. It should have been for housing loan, maximum loan is 20,000 for SC/ST beneficiary. That line would have come. So that is not come. So question number 32, answer is B. Question number 32, answer is B. So friends, this is the DRA guidelines. Go through the circular or go through the targets which I have mentioned here, the irrigated land, unirrigated land, etc. Then these two circulars, this is last circular till September 2023. So I expect the questions from these two circulars also. Which one of the following is not an additional detail to be incorporated in gold loan pass card as per HO circular 614/2023? Let's quickly go through. Only two more PowerPoints. So we'll stop it over there. I think recovery policy will take in next class. Say gold loan pass card. HO circular 614/23, earlier circular 269/23. The following additional details are incorporated in gold loan pass card to be generated in duplicate, to be signed by branch officials, borrower and jewel appraiser. You see, branch officials, borrower and jewel appraiser, one to be handed over to the borrower against acknowledgement in duplicate copy. And duplicate copy they got acknowledged, and that original you have to give to the borrower, and add the other copy to be kept inside the gold loan packet. All of you know. Now, so far, as per HO circular 269/23, these are all the things to be written in the gold loan pass card. So 1, 2, 3, 4, 5, 6. What are they? Name of the borrower, loan account number, amount, date of loan, date of maturity, review, description of items pledged. Now, as per HO circular 61/24, besides the 6 things, you have to add additional details also. What are the additional details besides the 6? Customer ID, rate of interest, repayment terms, processing charges, jewel appraiser charges, safekeeping charges. They're increasing the workload, no? Isn't it? Correct. Why? Because a lot of frauds taking place in the gold loan portfolio. Okay, now which is the additional? This is the existing, this is the additional. Now let's see the question. Which one of the following is not an additional guideline? Customer ID is an additional guideline. A rate of interest is an additional guideline. Processing charges is an additional guideline. Safekeeping charges is an additional guideline. You see. So these are all the additional customer ID, rate of interest, processing charges, safekeeping charges, all are additional. Which is not additional? Amount. Amount is already an existing guideline. See here, amount is the, yes, amount of loan, which is not an additional guideline as per 614. So it is an existing guideline. Question number 33, answer is A. Question number 34. Question number 34. For loans of above rupees 2 crores to depositors against our domestic term deposit, the required margin is 10% and the interest to be charged to the loan is 1% above the deposit rate as per HO circular 621/23. Friends, so far, before the issue of HO circular 621/23, rate of interest for loans to depositors against the term deposit of Canara Bank is 2% above the deposit rate. And various authorities were having the distinction. Now, in the 621, what they started telling is, if the loan amount is up to 2 crores, the rate of interest is 2% above the deposit rate. If the loan amount is above 2 crores, the rate of interest is 1% above the deposit rate. Then in both the cases, margin is 10%. Again, I repeat. So far, loans against deposit, that is BSL, or OD against the term deposits of Canara Bank, in the name of the depositor, loan is given to the depositor, not to third parties. So the rate of margin is 10% and the rate of interest 2%. Whatever may be the deposit amount or whatever may be the loan amount. Okay, delegation is given who can sanction the loan. And then various authorities can reduce the interest rate or margin also. Now, Canara Bank has introduced, if the loan amount is up to 2 crores, margin is 10%, rate of interest for the loan is 2% above the deposit rate. If the loan amount is above 2 crores and the margin is 10%, rate of interest for the loan is 1% above the deposit rate. Let us see the PowerPoint percentage. You will understand. With that, we are winding up, sir. See, two circulars, 621 and 624. This, I think I already explained to you in the deposit circular discussion. Again, one more. Loans against deposit term deposit standing in the name of the depositor. The loan is to the depositor himself, not to third parties. Delegation for reduction in margin interest. Loan up to 2 crores, loan above 2 crores. If the loan is up to 2 crores, so that is the normal margin is 10%, rate of interest on deposit rate is 2% above the deposit rate. Okay, then what is the power given to RO at CAC? For the RO at CAC, he cannot reduce the margin. He has to maintain the same margin 10%, but he can reduce the rate of interest to 1% instead of 2%. Loan up to 2 crores. Circular at CAC can reduce the margin. This is the base. 10% and 2% is the base. So ROA can reduce the interest, not the margin. Circular at CAC can reduce the margin and they can reduce the rate also. Base is 2, he can bring to 1%. CGM, GM, HOCAC, margin they can reduce to 5 and rate of interest to 0.75. Then EDCAC, like that it is there. Coming to loan above 2 crores, you see, the base is margin is 10%, rate of interest. So far, the rate of interest here also 2%. So irrespective of the loan amount, rate of interest was 2% above the deposit rate. And now, if the loan amount is above 2 crores, branch in charge, the base is 10% margin and 1% is against the deposit rate. RO also do not have any power. Here, RO was having the power to reduce to 1%, but RO cannot reduce the margin, RO cannot reduce the interest. Then circulated CAC can reduce the margin, but circulated CAC cannot reduce the interest. Only from CGM, GM, HO, CAC onwards only, interest rates can be reduced beyond 1%. Let us see the question and wind up the day. So, anything is there more? Okay, nothing is there. Okay, sir. Good. See, for loans above 2 crores, so first slide I showed you about less than 2 crores, second is above 2 crores. Loans above 2 crores to depositors against our domestic term deposit, the required margin is 10% and interest rate to be charged to the loan is 1% above the deposit rate as per HO Circular 621/23. Correct. So 10% margin, 1% above the rate. Branch also has the same power. RO also has the same power. Circulate can reduce the margin to 5%, but rate of interest he cannot reduce. It should be 1%. It should be 1%. Then that is CGM, GM, HOCAC can reduce the margin to 5% and rate of interest to 0.75. That means when the loan amount is above 2 crores, who has the authority to reduce the interest below 1%? Only CGM, GM, HO, CAC and the above authorities are having the power. You see, for loans above 2 crores to depositors against our domestic term deposit, the required margin is 10% and interest to be charged is 1% above the deposit rate. Who is empowered to reduce the interest rate for such loans as per HO circular? You see the PowerPoint. So above 2 crores, 10% margin, 1%. 10% margin, 1%. Circular can reduce the margin, not rate of interest. Who is empowered to reduce interest rate for such loans? So CGM, GM, HO, CAC can reduce to 0.7, ED, CAC to 0.5, board CAC for any percentage they can fix. Okay, so who is the authority? So the answer for that is, who is empowered to reduce the interest rate for such loans as per HO circular? RO get the CAC? No. GM, CGM, CO, CAC? No, he cannot reduce the interest. Circulate CAC and above authorities? No. CGM, GM, HO, CAC, above authorities. So question number 34, answer is D. Okay, sir, it is now for me, it is around 4:50 time. So we will let us stop the session today. So I have to cover that is IRACP norm, that is income recognition, asset classification and provisioning norm, and then the SARFAESI Act, and then the policy of the bank and appointment of recovery agents, and then the OTS policy of the bank, depending upon the time given by the CBOA organizers. So I will try to cover these things before your exam. So for anything, for any of your doubts, you can post me in WhatsApp. I'm available 24/7, 98403-74662. That is my WhatsApp number. Again, I repeat, 98403-74662. So thank you very much, friends. Good night. Let us meet in the next class. Thank you very much.
Thank you, sir. Thank you for your time.